All right, I think we're live. You know, I always say I'm a rookie at this. I only do this like 4 times a year, and it's usually with earnings reports. So I got to make sure my mic's going to work. I got to make sure you guys can hear me. I got to make sure the picture's fine. I got to make sure the volume for the earnings call is loud enough. So I always have to pull it up on my phone and listen to myself. And okay, I think we're in good shape here. What's going on, everybody? So a couple notes here that I want to make before we get the earnings release, which should come very quickly after the closing bell here in about 8 minutes. Usually they release their earnings report within 5 minutes, basically 5 minutes following the closing bell. First item is I will be enabling members only chat, live stream chat, at some point here before the earnings call starts, just to kind of limit the spam. A lot of people like to come into my live streams and my YouTube channel just to complain and call people names because their stock isn't going up every day of every week. So that's to limit the spam. It's unfortunate. I just don't know a better way to do it. You can join the live stream chat by hitting the join button located right next to the subscribe button. I don't know if you can do it on iPad or iPhone yet, but if you have access to a computer, go to a computer and do it, and it'll sync across all of your devices. And it's like $3 a month. Way less than a cup of coffee these days, but it's the only way I can really limit the spam. But for a few minutes here, I'll leave it open to the public. If you have anything you want to get off your chest or say, do so now, because I don't know how long I'll leave you with that ability to do so. Now, let's just discuss my thoughts on this. You members know I put out a preview video for this earnings report. You know that I think this is going to be a great earnings, especially on the bottom line, the profitability numbers, and it's obviously thanks in large part to the fact that Bitcoin appreciated in price so much from the beginning of the quarter till the end of the quarter. So Cleanspark is going to report, I think, more than a $300 million gain on the value of their HODL balance on their balance sheet, which does filter down to the net income line. I don't personally have Cleanspark being profitable operationally when you include depreciation and exclude that gain on fair value of Bitcoin. I think they're going to be just shy of it. I've always said the $100,000 threshold for Bitcoin is kind of the escape velocity. I think the average price of Bitcoin mined during the quarter was like 98,000. So not quite to that six-figure mark. But if Bitcoin prices stay where they are today, I think the next quarterly report will be the first one that Cleanspark really demonstrates that operating leverage. Now, we do know, just based on comments from the management team, that energy prices came down for them this quarter, which will help with their gross margin. The wild cards, obviously, are the other line items that are impossible to predict, like the professional fees, payroll, all those different line items. Depreciation's kind of hard to forecast as well because we don't know the exact mix of their mining rigs and the depreciation schedules and where those mining rigs are at on that schedule. We just don't really know that information. So I've done my best to estimate it. And I'll just tell you right now, my revenue estimation, which is going to be basically spot on. It's hard to miss on the revenue estimate. I think the company's going to report essentially $199 million of revenue for this quarter. And remember, this is Q3 for Cleanspark. It's calendar quarter 2, but it's fiscal quarter 3 for Cleanspark. Very, very confusing. But that's why this is the Q3 earnings report. It's kind of silly. And then my estimate for earnings per share is $1.09. And I'll just show you quickly because we have a few minutes here. I'll just show you quickly that Wall Street, when we go to the analysis page on Yahoo Finance, this is made available to everybody. Their earnings estimate for this quarter, the quarter ended June 2025, is just 7 cents earnings per share. I can tell you Cleanspark is going to come in well above that. I have them coming in $1 above that. And it just, at least so far, the algorithms have been kind of behind when it comes to Bitcoin-related companies that hold Bitcoin on their balance sheets. And algorithms, they've really been hitting the buy button after the Bitcoin-related companies report their earnings because they come in with that huge bottom line beat because of the appreciation in the price of Bitcoin, and the algos flip to the buy algorithm. I don't know if that's going to happen today. I personally don't hold any call options in Cleanspark right now. I haven't traded the stock in, quite frankly, a long time at this point. But if I had to guess, I guess I'm the bearer of good news today. I do think the stock is going to have a positive reaction after hours. I really do. Obviously, knock on wood, don't have a crystal ball. Have to give you all those disclaimers. Okay, so just a couple of minutes here before the closing bell. Let's get to some of your your comments and questions here. Burpee says, hang on here. I think I can pull this up on the screen. I got to make it visible. There we go. Burpee says, let's burn the shorts. Let's do it. Chris, what's going on, Chris? Good to see you. This baby is ready to pop. I agree. JJ's got some rocket emojis. Lots of people saying, let's go. Let's do this. Thank you all for coming and watching the earnings call here on my channel. It means a lot to me that I get to do this for a living. It's amazing. The blessings that you guys give to me. It's awesome at my young age to have such an audience and a caring audience like you guys. And one other note, I guess it's this eye. This looks bad whenever I turn on the camera. It's really not that bad in real life, but I did have like a small black eye. It was a football coaching accident. I was trying to be athletic in my old age of, what am I, 24 years old. And I was returning a kick, and I went down to scoop up the ball, and the kid ran his face mask right into me right there, and on my jaw right here. My neck was sore forever. I just don't recover like I used to. I'm getting older, I'm telling you. I might not have a wrinkle yet on my forehead, but it's coming. I can assure you it is coming, so don't worry about me. That's all that is. I honestly, I'm not in any pain anymore. I don't know. It's just like lingering, I don't know, kind of a bruise underneath my eye. But I'm okay, I promise. I wish I had a cooler story than that. Like I fought some bear in the woods or something, but I don't, so sorry. But yeah, unfortunately, this is a dictatorship on this YouTube channel. And again, I will be turning on members-only chat here in just a few moments because I don't want to deal with all the spam and the people that come here to personally insult me or any of the management team members at Cleanspark. I don't think there's any place for that, so this is a dictatorship. If you want to chat, it is $3 a month. I wish it didn't have to be that way, but that's the way it has to be. Drew says, OSS comments. Yes, I will comment on One Stop Systems here in just a little bit. It looks like we're about at the closing bell. I listened to the One Stop Systems earnings call actually right before I went live, kind of over my lunch hour actually. I took a bunch of notes, very, very positive stuff for One Stop Systems. They're my AI play. Things look really, really good over there. I want to buy as many shares as I can of One Stop Systems. I will go through those numbers here probably 15-20 minutes after the closing bell, after we're done going through that Cleanspark earnings report, press release, and prior to the Cleanspark earnings call starting. That's when I'll go over One Stop Systems. I know I promised to you guys that I would do that. Let's see. Oh, here we go. Saludos desde España. What's going on? I actually took a class of Espanol in college, but it has not stuck with me, if you can't tell by my pronunciation. But what's going on? Sean says, you let me chat last night. And that's the problem. It takes like the 1% of bad people to ruin it for everybody. Because yes, 99% of you I really enjoy chatting with, and you guys bring great things to the table. But it's the 1% that ruins it for everybody else. And I wish there was a better way to do it. There's just not. Fairfax says, just bought some calls. Good luck to you, sir. I hope I'm right about that, and I don't end up eating my own words when I say that I think the stock's going to be green. Sean says, not paying $3 to send YouTube messages, though. Good luck, everyone. That's completely fine, Sean. But you do actually, if you do join the $3 membership, you get access to all of my members-only videos as well. So it's not just the chat, but I do get it. That is your choice, and that's fine, completely fine. Okay, let's go ahead and how about let's do this. I will leave the chat open to the public until somebody comes in and spams something very disrespectful. Then I'll change it. So I'll leave it open to everybody until somebody comes in and ruins it. So don't be the guy that comes in here and ruins it, because again, this is a dictatorship on this YouTube channel, and I will filter everybody's comments. I will do it. I will. So don't ruin it for everybody. Okay, we got to be getting close here. The closing bell just hit. So let me flip over my screen. Okay, hang on here. And we actually do have Trade Desk earnings, Rocket Lab earnings, SoundHound earnings, SMR, that's an interesting one, Pinterest, Twilio, CleanSpark, of course, Monster, Instacart. There are a lot of earnings after hours today, really, in all actuality. But obviously, we're going to pay attention mostly to CleanSpark's earnings today, which means I should probably get their IR page pulled up and ready to go and refreshing for that earnings report so that I can pull it up as soon as it hits the news wire. Okay. Let's see. Says my pronunciation is perfect. Thanks for your effort. I try my best. Thank you. Thank you. Christopher, what's going on, Christopher? Jason says everyone needs to give a thumbs up. Hey, I appreciate you, Jason. Yeah, give me a thumbs up. That actually does help out my YouTube channel, believe it or not. It takes half a second to click the thumbs up button. So I appreciate that. Soaring Kitty, and I'm going to call you Soaring Kitty so I don't get demonetized or something. I love Matthew Cleanspark. Matthew's great. He's great. He's very whenever you're around him, you can just tell people are he has that aura about him that everybody just wants to come talk to him. And I think it kind of puts him out, honestly. I think it kind of drains his battery, but he's so good at talking with people. Not saying he's flawless. He's made some mistakes. Some optics have been poor in the past, and he knows my feelings about that. And he knows you guys' feelings about that. Alta says, let's make it a happy day, Rex. Let's do it, man. Let's do it. Christopher says, this pair trade with Bitcoin and miners is getting old. Will shorts ever recover? Yeah, I mean, that's the thing. Shorts, Warren Buffett even says it, and I know it's kind of asinine to compare Warren Buffett to something like a Cleanspark investment, but short sellers are forced buyers of your stock at some point in the future, and that's why, like, Cleanspark's management team, it might seem that they don't care about short sellers right now, and it's because they don't, because they're not utilizing equity to raise funds to grow the business. So they don't really care if the share price is suppressed right now. They know over time, if they continue to execute and they operate well, and maybe they kind of find a new identity for their company, not pivoting to AI or Bitcoin treasury or anything like that, but actually achieving the escape velocity, operating leverage, maybe share buybacks in the future, that they know over time that their share price is going to be fine. Short sellers are forced buyers of the stock at some point in the future. Absolutely, that's going to happen. But yes, there is definitely an ongoing pair trade here. And there are I'm actually going to make a Cleanspark video. It might come out tomorrow, might come out over the weekend, but make sure you guys come back and watch that, because I do have some updated thoughts on the pair trade and everything going on there, as well as what I think the company can do and should do. Now I'm going to take a drink of Sprite. If anybody sees the press release, let me know. I'll keep refreshing the page here. And actually, sometimes the press releases, you can get access to them quickest off of X, because there are bots that just swim over those, the news wires, and they just auto-populate on X. They post them for you. So I'll pull up X on my phone just to see if I can get it pulled up there before Cleanspark's IR page updates. Yeah, Sean, I agree with that. Mara just is a dumpster fire. They just can't even help themselves, it seems. Soaring Kitty says, do you genuinely think Cleanspark could be a long-term hold? Absolutely. And again, come back for that video here either tomorrow or over the weekend, and I'll explain that more in detail. Most people only view this thing as like a short-term trade. I don't at all. I think Cleanspark, the story here is just so young yet. And eventually the company is going to demonstrate the operating leverage. They're going to have, their digital asset management team is going to start to have an impact on earnings. They might do some share buybacks. I really view the Bitcoin mining companies becoming kind of the Visa and MasterCards as the Bitcoin network continues to advance and grow. I think that's what's going to happen. They're going to kind of rake in all these transaction fees over time. So I do think Cleanspark is going to end up being a great long-term hold. It's actually been a very good hold for the last, what would that be, 3 years since 2022? And really, I could go back to 2020 for when I was buying like at $2, $3 a share. It's been a good hold since then. I mean, are you kidding me? The gains we've seen in just 5 years. Now, sometimes it's been disappointing. Sometimes it's been exciting. Okay, let's go ahead and let's refresh Yahoo Finance, see if there's any price action after hours. There we go. Like I thought, the stock's having a positive reaction after hours. I think that's the buy algorithms kicking in, because they probably came in and kicked butt on that bottom line number, the profitability number. I'm going to take a pause here from the chat, so I apologize if I miss your comments. You can repost your comment here in a few minutes and hope that I see it again. But I'm going to have to kind of focus on the earnings release here just for a little bit. And let's go ahead and see if it is out on the company's. Here we are. Yep, here we are. They just came out. Okay. Oh, yeah. See, I was right on. I told you. It's very easy to predict the quarterly revenue numbers. $198.6 million, up 91% from the prior year. Net income of $257.4 million, 90 cents of basic earnings per share. So that actually came in 19 cents below my personal expected EPS. And what would that be? 83 cents above Wall Street's expected earnings per share. They've achieved 12,703 Bitcoin held in treasury with more than 1 gigawatt of power under contract. Here we go. The CEO, Zachary Bradford, says, "This was the most successful quarter in Cleanspark's history, and it reflects the strength of our strategy, the discipline of our execution, and the tireless commitment of our team. We reached 50 exahash per second of operational hash rate in June, becoming the first public company to do so exclusively with American infrastructure, while achieving record basic earnings per share of 90 cents and nearly $200 million in revenue. We also grew our Bitcoin treasury to over $1 billion in value, this is a key point, all without raising capital through equity offerings since November 2024. These results show we are not just scaling, we're doing so efficiently, responsibly, and profitably." Profitably kind of comes with an asterisk because I think all of their profits here in this quarter came from the gain on the fair value of Bitcoin. Just saying. But over time, again, they will demonstrate the operating leverage. And I need to get this comment off the screen. Sorry, guys. I'll get rid of this. There we go. Bradford continued, "Having achieved 5.8% of global hash rate under management and over 1 gigawatt of power contracted, Cleanspark is proving that our vertically integrated model is built not just for growth, but for leadership. As the Bitcoin network evolves, our focus remains on expanding market share in Bitcoin production, leveraging our unmatched operational playbook, and executing with the urgency and excellence that have brought us to this point. We believe the future of Bitcoin will be defined by those who build with purpose, and Cleanspark is setting the standard." Here comes the CFO, Gary Vecchiarelli, and I think I'm finally pronouncing his last name correctly. "Fiscal Q3 was a pivotal quarter for Cleanspark as we fully funded operational expenses through monthly Bitcoin production while simultaneously expanding our Bitcoin treasury. We also launched our digital asset management team. I don't know what that apostrophe is for. Maybe they missed an S. Digital asset management team's derivatives strategy, which began producing promising early returns and validating our approach. As we look ahead, we remain committed to drive accretive growth through high-efficiency operations and a resilient, strategically positioned balance sheet." Okay, so we covered the quarterly revenues. We covered the net incomes. Adjusted EBITDA was $377.7 million, up from negative $12.6 million in the same period a year ago. And here's the balance sheet as of June 30th, which I was interested in. $34.6 million in cash, $1.08 billion of Bitcoin. That's kind of a big milestone to hit, $1 billion in Bitcoin. Total current assets of $1.21 billion. Total mining assets, including prepaid deposits and deployed miners, of $985.9 million. Let's call it $986 million. For total assets of $3.1 billion. And let's just do this for fun. What is the market cap of Cleanspark? So their total assets match their market cap right now. That's crazy. That's crazy to think about. And I thought that might be the case. Current liabilities of $276.8 million. Total long-term debt, net of debt discount and issuance costs, of $644 million. That includes the convertible note they did at the end of last year. And the current liabilities include, I believe, the line of credit they have with Coinbase. Total stockholders' equity of $2.14 billion. Working capital of $933 million as of June 30th, 2025. So what do you guys think? Good quarter, bad quarter? I was right. I wish I purchased call options now, but beggars can't be choosers. I guess it's not up that much after hours, but the buy algorithms definitely did kick in on that EPS number like I thought they would. Up 3% right now. We'll see if that fades. It might fade. It might expand depending on what we get in the earnings call. They always give us some pretty good nuggets during the earnings call, and I do my best to highlight all those things. Now, I don't think the quarterly report is out yet. I'll check. And no. Looks like the answer to that is no. So I'll have to reserve going through that quarterly report, the 10Q, for a members-only video sometime, unless it comes out here sometime prior to the call. So let me know your thoughts on this in the chat. And again, I'm going to leave it open to the public. The chat, everybody's going to be able to chat until somebody ruins it. So don't be the guy that ruins it. Don't be the idiot that ruins it for everybody. Okay. Moan says, we've had a very difficult year with Cleanspark and the rest of the mining companies. When are they going to start pulling strong? I could go on a tangent about that for probably an hour. It just boils down to that there's a lot of alternatives right now. You know, you have the Bitcoin treasury companies like MicroStrategy that have convinced their shareholders that, no, you're not shareholders. You're our customers. You're going to fund our growth in our Bitcoin treasury. You're our customers, not our shareholders. They've somehow convinced them of that. We're seeing that that's kind of unsustainable right now, but at least up until now, that's really started. That's pulled a lot of capital away from the Bitcoin miners because they've performed so well. But we've seen as more companies have adopted that treasury strategy, all of a sudden, all of those treasury companies are competing for those same capital, those same dollars, which is shrinking all of their multiple to net asset values, which means that, well, their strategy of diluting to increase Bitcoin per share gets less effective. And it's kind of a law of large numbers thing. It's just unsustainable. But that up until this point has been pulling capital away from the Bitcoin mining companies. You've also had the ETFs, billions and billions of dollars flowing into the ETFs. Inevitably, some of that money came out of Bitcoin miners and into the ETFs. And then you just have, you have the Bitcoin mining companies where people say, well, if I'm going to buy a Bitcoin miner, why don't I buy one that also has AI upside? People think they get a free call option when they buy IRIN or Bit Digital or an HPC AI play that's also mining Bitcoin. That's just kind of what goes through people's minds. And that pulls capital away, especially from the pure play mining companies like Cleanspark. So there's a lot going on that's pulling capital all sorts of different directions. Cleanspark is the only company that's stuck tried and true to its game plan of, no, we're a Bitcoin mining company. That's all we do. We're going to be really good at it. Over time, we're going to demonstrate operating leverage. And I think over time, as that gets demonstrated, as those other two alternatives, at least especially the Bitcoin treasury strategies, prove to be more unsustainable, there's going to be capital that looks to rotate back into the other names. And that's where Cleanspark needs to step up. And they need to be ready to welcome in that capital with open arms, saying, nah, you know what? If you care about raising Bitcoin per share, yeah, you just participated in that by being the customer of MicroStrategy, but you can go ahead and buy Cleanspark and we'll increase your Bitcoin per share by mining it at a profit and actually decreasing our shares outstanding through share buybacks. That's how we will increase your Bitcoin per share. And that's a lot more powerful than you being the customer of some Bitcoin treasury company. That's what Cleanspark needs to say. And if they do that, I think a lot of capital is going to flow back in. Mikey says, did they achieve positive EPS without FASB? No, I do not believe so. Okay. Chris says, I like it. Price should be higher. In my opinion, need a good, energetic call. I agree. Hopefully they bring a lot of energy in this call. Let's see. Bought it back in 2020 before they were a miner. Thanks to you, Ben. Been adding since. Truly life-changing. Thanks again, Rex. Hey, congratulations on that, Jose. Congratulations. Blake Lewis. What's going on, Blake? If you guys remember DR Lewis, unfortunately passed away. Blake is DR's son. I've had the privilege to meet Blake in person. Great kid. We hit it off, I guess you could say. Pretty good friends. It's nice to have somebody else that's younger in the community as well. He has a page on X. Make sure you go follow him. I'll just pull it up here on the screen for everybody. Go follow Blake on X. He's kind of trying to build his platform, and I really want to help him do so because he's a great kid, and he actually puts out really good content. So this is him on Twitter. Go follow him, Blake_Lewis_. He's DR Lewis's son. So quick shout out there to Blake. Thanks for tuning in, Blake. That's awesome. ZC says, I'd say that's pretty exceptional. It's the best they've ever had. End of discussion. The stock should be trading at a minimum of $15. Hey, I can't argue with that. Christopher asks, plans for another interview with Matt on the horizon? Yes. We've been talking about doing another interview fun fact, today marks officially exactly 5 years since my first interview with Matthew on the YouTube channel. Exactly to the day. August 7th of 2020 was our first ever interview. It's kind of crazy. To the day. But we've been talking about doing another interview. And there's some other things that are on the table too that hopefully I'll be able to talk about more soon, that have kind of delayed that process a little bit. But we're planning on doing another interview. There's your short answer to that question. Let's see. Victor says we need a table bang. He wants a table bang during the earnings call. That wouldn't hurt. If I had to guess the management team member that would actually bang the table, oh, who would do it? Probably Gary, the CFO. I could see him banging the table. Zachary, I don't know. I don't think he'd bang the table too hard. He's not that type. Guy asked for my Cleanspark price target for 2025. I actually do have my price target spreadsheet pulled up here somewhere, I think. I know the screen's black for you. Let's see if this works. Yeah, here we go. Okay, where's my fair value? So this is my fair value with if Bitcoin rises to 130,000, Cleanspark achieves 65 exahash per second, and the Bitcoin network hash rate rises to 1,300 exahash per second, and Cleanspark's HODL rises to 15,000 Bitcoin. I have the fair value of the company sitting at $23 right now. I don't know if that's probably my current price target. I'm kind of right in line with a lot of Wall Street between the $20 and $25 mark. This spreadsheet also is made available to all those paid monthly members. If you want to join the membership, feel free to do so. Google RexFinance, Patreon, it'll pop up. Or you can join on YouTube. Hit the join button, located right next to the subscribe button. Okay, let me switch back my screen again, and the screen will go black here just for a second. Okay, let me pull that comment off the screen. Tyler says, boggles my mind how they absolutely refuse to perform an insider buy. Yes and no. I agree with you, but I see both sides of it because they are always growing, so they do always have insider information. Now, could they do a trading plan like they did for their market sells? Yeah, they could. They could plan to buy the stock 6 months down the line. They could today utilize their 10b5-1 trading plan and say, okay, I want to buy 50,000 shares of Cleanspark on December 7th of this year. They could do that right now. They could do that just like they did with their sells. So I agree with you in that regard, Tyler, but I don't think they're BSing us when they say they can't do it on the open markets actively today. Because they are in possession of material non-public information basically at all times. Jason says, really miss DR. Yeah, Jason, me too. DR is a great guy. I had the privilege of meeting him down in Georgia actually once as well. Very welcoming, very, very happy guy. Yeah, I don't know. Those things always just happen to the good ones, it seems. And yeah, I miss him. I miss him every day, man. He was good for this community. But his legacy lives on through Blake. So again, go follow Blake on X because he's a spitting image of his dad. Okay. Let's see. Richard says he wants to share a buyback. I think at some point in the future they'll announce that. Do you share those spreadsheets for other stocks for members? Yeah, I have a spreadsheet for all the companies that I own. So I have a spreadsheet for One Stop Systems, Symbotic. I haven't talked about Symbotic publicly on the channel a lot. But Symbotic has been one of the best performing stocks on this YouTube channel ever. I started talking about them kind of around the $19 per share range, and it went up to $60. It's actually down today after their earnings report, down like 15% today. But yeah, I have spreadsheets for all those things. PayPal, I have a spreadsheet for. Trying to think of what else. Kind of drawing a blank. But all the companies that I own, I have a spreadsheet for. I think Trade Desk, I have a spreadsheet for. Let's see actually how the Trade Desk is trading. Wow, Trade Desk is now 29% after hours. I'm going to have to look at that, see if that's a buying opportunity. Holy smokes, that thing fell off a cliff. Let's see. Carl says, every company is always growing, so that's BS. Yes, but it's a different type of growth. Like, with the Bitcoin mining space to grow, you literally have to acquire new businesses or new infrastructure. You have to. Whereas with, if you're a software company, you don't necessarily have to acquire new software or put new software out to grow. It just happens as you attract more and more people through your marketing spend and stuff like that. So it's a little bit different. Brian says, do you still like Flux? I'm still holding. I wouldn't say I like them. Ever since they couldn't turn in their homework, I've kind of put a downer on that company. Let's see. Rob says management can at least throw a bone or two to buy back shares. I mean, it's possible they might do that. I'm not going to rule it out. I mean, look back at the doldrums of the 2022 bear market. Gary Vecchiarelli, the CFO of Cleanspark, bought shares on the open market at like $1.92 or something like that. It was literally the bottom price of Cleanspark in the bear market. He literally perfectly timed the bottom. And I think that, it's partially, yes, that's the power that insider buys can have. It does force other people to buy into the company. And I do wish we could see that. I wish we could see that happen more often. But also that part of that obviously is the product of, the overall stock market bottomed in 2022 as well. Okay, let's go ahead and look. Let's see how Cleanspark's doing after hours. Have we faded? I'm guessing a little bit. Yep, we're down. We're up only 1.4% now after hours. We'll see how the earnings call goes. Again, I don't everybody's so consumed with what happens in the next minute of trading. I don't know. My mind just works differently than everybody else, I guess. I'm not overly consumed with what happens over the short term because I know what I own. I know what I invest in over the long term. I believe in my thesis that over time, people are going to pay a premium for this company again. And, it's just a matter of time until then. And I got a lot of time in front of me. I do. I'm 24 years old, right? So there's no reason for me to be impatient or start to gamble or start to throw emotions into what I buy and sell on the stock market. They always say, keep your emotions out of business decisions. When you're buying and selling stocks in the stock market, you're making a business decision. So keep your emotions out of it. You know what I'm saying? Whitehawk says you're only 24. I'm pretty sure I'm only 24. I lose track, so maybe I'm a little older. But yeah, I born May 7th, 2001, so I think that makes me 24 years old. Yeah, so I am pretty young. But I'm just fascinated with this stuff. I literally study this all day, all night. I started doing stock market related stuff when I was in high school, like a sophomore in high school. Went on to study finance and accounting at a top 10 business college in the United States of America. Graduated a semester early, and yeah, this has been my business, along with going over and helping it out at the family farm every once in a while. That's kind of been what I've been doing since I graduated college a couple years ago. Let's see. Sean, I don't agree with that. He says a company does not truly believe their price is undervalued until they buy it with their own money. I don't agree with that at all, because they literally stopped. They say no more dilution. They didn't renew their ATM program literally because they don't want to sell more shares of their stock at the current valuation, which means they think the stock is undervalued right now. So that's not like black and white like I think you're trying to make it. And a market is a market. Like in a bear market, even in a bear market, you don't see most of the Magnificent Seven executives, management team members, they don't go out there and insider buy their stock. Yeah, that happens a little bit. That happens somewhat. But these management team members, these executives, they get stock for working at the company. So it's actually pretty rare that they go out and insider buy the stock. So the Bitcoin mining space really isn't that different in that regard. These management team members are awarded in stock. And for the most part, other than maybe one example in the last 6 months, Cleanspark's management team, their board members, the only reason they've sold shares of their company is to sell for tax reasons, to pay tax on their stock rewards. That's the only reason they've sold. Ariel says, really talented, keep it humble. Hey, thank you so much. That means a lot to me. Sean, I love you, man. I really do. You always bring good thoughts to the table. You always do. This is the new CEO of UNH bought at $288. Look at their share price now. I know that's been through the ringer. I actually wanted to look at it as like a potential buy for my retirement portfolio. I just don't know if I can do it, guys. I don't know. Let me know if there's any UNH shareholders, United Health Group shareholders here in the chat. But I don't know if I can do it. Sodahead says, first time watching you live. Do you follow Sebastian and Stock Picks by Tim? Thanks. First of all, thanks for tuning in for the first time. That's awesome. I always love having new viewers, new people commenting. Short answer, I don't know who Stock Picks by Tim is, but I do know who Sebastian is. I tune into Sebastian. I this is going to sound really cocky or something, but it's not intended that way. I just don't have a whole lot of extra time to watch other people's content in this industry, in the Bitcoin mining space. But I do tune into Sebastian, I don't know, once every month maybe. So I don't tune into everything, but I do know who Sebastian is, and I like him a lot. Now, this is a great point, and I will agree with Bailey Miley. The salaries, how do you explain paying themselves so much? I don't. They make too much money, plain and simple, put a period on it. They make too much money. I don't have a rebuttal to that. And Jared says, executive comp is an issue other than they are running a clean company. Again, agree with you. And this earnings call is going to start here in a few minutes. Okay, let me go ahead and mute this. Oh, we're starting now. We're starting now? No. Okay, let's flip the slides. Hey, let's go ahead. I muted it for a second. Let's go ahead and do a volume test. And I'm assuming their voices are going to be louder than the music, so this won't be perfect. But let me know if this volume is loud enough. If you can hear the music, fine. And I'm going to be quiet and just put a yes or no in the chat if this is loud enough. And I'm guessing you're going to say no because the music is very quiet. Can you hear the music, I guess is my first question. I don't want to play it for too long because I might get copyright stricken. I don't know if that's the word. But let me know if you were able to hear the music. Okay, people say yes. Sounds good for now. Okay, good to know. Zachary Myers says, is Cleanspark in your retirement? Yeah, a small percentage. The way I have my retirement structured, my Roth IRA, I adjust it all the time. I think right now I'm at 60% in index funds. So I split that up between large cap, mid cap, small cap indices, low expense ratio stuff. And then with the other 40%, it varies. Between 30 and 40%, I'll do some individual stock picking. That's where I do own some Cleanspark there. I own Symbotic there. I definitely own One Stop Systems there. I definitely own PayPal there. I think I own a few shares of Tesla. I don't know if I hold any Trade Desk in there. I don't hold any Flux Power in there. I do own Fluence Energy in there, ticker symbol FLNC. That's made quite a comeback recently. I think that's almost... Oh, AMD I own a little bit in my retirement. I think that's the basically everything I have in there. Okay, Chris says it'll need to be louder. I can adjust that when the call starts, for sure. Let's see. Do you think long-term Cleanspark will outperform Bitcoin? Yes, I do, because if I didn't, I wouldn't own Cleanspark. Like there'd be no point to own Cleanspark if I didn't think they'd outperform Bitcoin. I just own Bitcoin, right? And I do own Bitcoin, but I would solely own Bitcoin if I didn't think it was in the range of outcomes for Cleanspark to outperform Bitcoin over the long term. And look at that. The very next question was, do you own Bitcoin? Yes, I do. I actually bought a whole Bitcoin at like $23,000 back in 2022. And I posted about it on X. You probably can find it over there somewhere. AMD is going to create generational wealth. Great company. Yeah, great company. I bought my shares in my retirement account for like right at $100, I want to say. Gorilla says, Cleanspark is my worst invest. Oh, looks like the conference call is starting, so I'm going to mute myself, and I'll chat every once in a while. I'll take notes, and we'll do a big review at the end. Okay.
2025.
Let me know if the audio is loud enough, if you can hear it.
And is available on our website at www.
If I need to turn it up, let me know. If I need to turn it down, let me know.
Additionally, the 10-Q will be filed shortly. Today's call is also being webcast, and a replay and transcript will be available on our website. On the call with me are Zach Bradford, our Chief Executive Officer, and Gary Vecchiarelli, our Chief Financial Officer. Keep in mind that some of the statements we make today are forward-looking and based on our best view of the world and our business as we see them today. The statements and information provided remain subject to the risk factors disclosed in our most recently filed annual report and 10-Q. We will also discuss certain non-GAAP financial measures concerning our performance during today's call. You can find the reconciliation of non-GAAP financial measures in our press release, which is available on our website. And with that, it's my pleasure to turn the call over to Zach.
Thanks, Harry, and good afternoon. I'm pleased to welcome you to our call reviewing Cleanspark's fiscal third quarter 2025 performance. This quarter
Jared,
was
I
our
turned
most
it up just
successful
like
to date
10%.
across a
Hopefully
multitude
that
of
helps.
metrics and reaffirms the strength of our strategy. The stage is set for continued growth, supported by world-class operations, a strong balance sheet, and supportive macro and policy tailwinds. While sustained Bitcoin strength was a contributing factor, our performance is grounded in strategic discipline and the tireless efforts of our entire team. Behind our record-setting revenue and earnings per share of 90 cents is billions of dollars of investment across 4 states, over 1 gigawatt of contracted power, and at today's price, approximately $1.5 billion worth of Bitcoin. As America's Bitcoin miner, we operate with high standards and set aggressive yet achievable targets. Our achievement of 50 exahash of operational hash rate was a key contributor to our outstanding results, and a milestone made possible only through disciplined execution. Our third quarter revenue was nearly $200 million, up 94% compared to the same period last year, and more than 9% over our prior quarter. We achieved earnings per basic share of 90 cents thanks to healthy gross margins of 54.6%. Importantly, we produced 2,012 Bitcoin, and our treasury grew in value to approximately $1.08 billion by the end of the quarter, an increase of more than $100 million since last quarter. This was driven by both production and Bitcoin price appreciation, all while self-funding operations, further validating our prudent accumulation strategy. Our total Bitcoin in treasury stood at 12,608 at the close of the quarter, demonstrating our escape velocity, allowing us to scale without relying on a single share of equity funding since early November 2024. June 30th marked the highest quarterly close for Bitcoin in its history, driven by global adoption, rising institutional investment, and the maturation of the asset class. Additionally, we remain the only large-scale holder to have mined every Bitcoin we hold in treasury. We do this because we can generate Bitcoin below spot market rates. Our cost per Bitcoin in the third quarter was $44,806, which was far below the average spot price of approximately $98,500 during the same period. Turning to our fully self-operated infrastructure, our team met our 50 exahash target on June 24th. We were the first publicly traded company to reach that milestone exclusively with American infrastructure. Our fleet's average power efficiency was just over 16 joules per terahash at quarter's end, and we have continued to improve that figure. This further cements our fleet as one of the most efficient in the world. When our scale and fleet efficiency are paired with our flexible operating model, this enables us to manage towards profitability, not arbitrary power costs. Our fully contracted power portfolio comprises over 1 gigawatt. Importantly, we are currently utilizing about 80% of that total, leaving over 200 megawatts available for immediate expansion. In fiscal third quarter, our all-in cost per kilowatt hour was 5.6 cents, nearly half a cent lower than in the second quarter. This decrease reflects an easing of seasonal power prices as we transition from winter to spring. We also energized additional sites in our power portfolio.
I had their energy prices down at 5.5 cents. They came in at 5.6 cents.
And flexible energy strategies. Just as our fleet efficiencies improved over time, our goal remains to reduce power costs across the portfolio and growth pipeline, always with an eye towards profitability. As I mentioned, we reached 50 exahash in June, a major milestone in the history of our company. It reflects years of focused strategy, disciplined execution, and a relentless commitment to doing things the Cleanspark way. This growth wasn't accidental. It's the result of building and operating our own infrastructure from the ground up, giving us the control, resilience, and scalability to lead the industry.
What's going on, Chad?
But we
Thanks
have
for
never
that gifted
pursued growth
membership.
for its own sake.
And it went to somebody that deserves it, Sean. That's awesome. Thank you.
Of delivering long-term shareholder value and advancing our vision of becoming the global leader in Bitcoin mining, built, owned, and operated in rural America. Consider the speed at which we achieved this goal. At the end of fiscal 2024, our operational hash rate stood at 27.6 exahash. In just 9 months, we nearly doubled that figure to 50, while improving fleet efficiency and the overall operational performance. Here's how we did it. Tennessee became our second largest source of hash rate, thanks to 2 acquisitions and a 60 megawatt greenfield development. It was the fastest state-level ramp-up in our history. Our growth in the state demonstrates our land and expand strategy in action. We also launched 2 sites in Wyoming, a state with low-cost, reliable energy, and supportive leadership at the local, state, and federal levels. Leaders who understand the value of our business can deliver to their communities. While our operations in Wyoming are currently smaller than Georgia and Tennessee, we have the opportunity to evaluate hundreds of additional megawatts in the region. We also continue to optimize and expand our operations in Mississippi and Georgia, with Georgia contributing significantly to reaching our 50 exahash milestone. I want to take the time to spotlight an example of rapid execution. We closed on a new plot of land in rural Georgia in mid-May, and just 5 weeks later, we had immersion-cooled mining live and hashing at the site. That kind of speed to revenue is made possible by tight collaboration across our construction, deployment, operations, and growth teams. This project exemplifies our relentless focus on speed to revenue. This is just one example of how we set the industry standard every day and embody the values and mission of Cleanspark. This is Cleanspark at its best, disciplined, fast, and unified. Our team is our greatest asset, and when they execute our battle-tested playbook, we're nearly unstoppable. Looking forward, we will apply our years of experience to drive our next phase of mining and power expansion. As we shared on our last call, we moved away from time-based exahash guidance. Instead, we're focused on capturing a greater share of global hash rate as a key metric, which we believe is a more meaningful measure of our market competitiveness. At the end of fiscal 2024, we held 4.3% of global hash rate with 27.6 exahash. When we hit 50 in June, our share rose to 5.6%, reflecting our ability to outpace the broader mining landscape and earn more Bitcoin over time. And we are not slowing down. We are taking steps to rapidly deliver an additional 10 exahash of operational hash rate on a cost-effective timeline. All miners required for this growth have already been secured. Nearly half of the necessary infrastructure is in place, and we are finalizing plans for the remainder. At today's difficulty, this expansion would represent approximately a 1% increase in global hash rate, further expanding our competitive position and demonstrating continued execution at scale. Now, a core tenet of Bitcoin is its decentralized nature. Mining is broadly distributed by design, ensuring no single participant dominates the network's hash rate. With 5.8% of global hash rate at 50 exahash, Cleanspark is amongst the largest miners in the world, an excellent position for us and a healthy signal for the Bitcoin ecosystem overall. We have ample room to grow while remaining responsibly sized within the decentralized landscape. The scarcity of Bitcoin is also by design, and there are a limited amount of Bitcoin available to miners each day. This is why we are laser focused on responsibly delivering the proof of work required to grow our share of the network, supporting the world's hardest money on behalf of our shareholders. We have multiple proven pathways to capture additional market share, develop new power pipeline capacity to expand our infrastructure portfolio, optimize our mining fleet to extract more hash rate from existing resources, build new sites through greenfield development, and acquire capacity through opportunistic M&A. These strategies are not theoretical. We have executed each of them at scale. Together, they form the foundation of our growth playbook as we continue driving long-term value. We have consistently focused on being the best pure-play, vertically integrated Bitcoin mining company in the industry by design. While alternative compute models like AI and HPC have drawn attention, repurposing a mining infrastructure for these applications is far more complex than it may appear. Operators must navigate higher capital intensity, customer uncertainty, and a rapidly evolving hardware environment that can threaten project ROI. By contrast, Bitcoin mining remains a proven and scalable business model, especially in today's constructive market environment, that we have optimized unlike any other company. Thanks to this focus, Cleanspark stands apart as the only large-scale, pure-play Bitcoin miner with wholly self-operated infrastructure, a position earned through deliberate strategy, not rigid ideology. We have followed this course because up to this point, we have determined that our power contracts and land assets are being put to their optimal use in our mining operations. That said, we have always understood that power has value, no matter how it's used. We have always viewed our real estate portfolio, power contracts, and geographic positioning as assets that hold significant value independent of their utilization for Bitcoin mining. Some sites, both in our current operational footprint and in our pipeline, have potential or alternative value through other use cases. To the extent that certain sites, due to location, infrastructure, or proximity to metro area centers, can return superior value, we remain flexible and open to evaluating monetization options that enhance shareholder value. Today, Cleanspark has a significant power pipeline that can fuel continued growth. We are currently evaluating approximately 1.2 gigawatts of potential near-term power opportunities, primarily in areas where we have already operate or with proven partners we have successfully scaled with in the past. The value proposition for utilities in these areas is clear. In tight power markets, flexible customers like us help balance demand and improve grid resiliency. In addition to our near-term pipeline, we are also exploring an additional 1.7 gigawatts of long-term power opportunities. These longer horizon projects would require utility-level infrastructure investments. This layered pipeline ensures we have a long-term access to scalable, low-cost power and gives us the opportunity to execute with precision, speed, and capital efficiency when the time is right. As our pipeline moves from evaluation to project implementation, we will execute our growth plans to best utilize these opportunities to continue delivering operational excellence at every point of the growth cycle. Our track record speaks for itself. We know how and when to pull the trigger on high return opportunities. This discipline allows us to grow with speed and efficiency while keeping capital stewardship at the heart of every decision. The good news for us and for the broader Bitcoin ecosystem is that we are now enjoying significant regulatory tailwinds, both in Washington, D.C. and in state capitals across the country. On July 18th, I was honored to attend a White House ceremony where President Trump signed the Genius Act into law. This legislation, championed in the U.S. Senate by Senator Bill Hagerty of Tennessee, establishes a clear regulatory framework for U.S. dollar-backed stablecoins. That clarity is expected to drive increased demand for both U.S. Treasuries and Bitcoin. Earlier that same week, the U.S. passed another milestone bill, the Clarity Act. This bipartisan legislation would establish a comprehensive federal framework for non-stablecoin digital assets like Bitcoin. It further solidifies Bitcoin's treatment as a commodity, potentially unlocking trillions in capital flows and paving the way for deeper integration with mainstream financial markets. Beyond Washington, momentum is building at the state level as well. Senator Cynthia Lummis of Wyoming continues to be one of our industry's strongest champions, advocating for the creation of a federal strategic Bitcoin reserve. Both Texas and New Hampshire have already taken steps to establish similar reserves at the state level. And just today, we saw a new executive order on the president's desk making Bitcoin a qualified asset in 401k accounts. Together, these developments reflect the growing recognition of Bitcoin's role in U.S. innovation, energy policy, and monetary resilience, and they represent real tailwinds for Cleanspark's continued growth. Progress in the sector isn't limited to Washington. Wall Street and capital markets are increasingly providing tailwinds for Bitcoin adoption. One emerging trend we're watching closely is the rise of Bitcoin treasury companies, public companies that accumulate Bitcoin on a balance sheet through direct purchases rather than production. These entities represent a growing cohort of capital activity competing for a scarce resource, and their participation is helping drive spot prices higher. As this dynamic unfolds, Cleanspark's business model becomes even more valuable. We generate Bitcoin below market rates through our mining operations, and unlike treasury companies, we don't have to compete for coins in the open market. We produce them ourselves, efficiently, at lower cost and spot prices, and at scale. In a market where the race to accumulate Bitcoin is accelerating, we believe that mining remains the most strategic and scalable path to long-term value. And Bitcoin is not a passive asset on our balance sheet. We have a dedicated digital asset management team operating an institutional-grade trading desk to support our operations and generate responsible, risk-adjusted yield. Since inception, our approach has been measured and disciplined. In late May, the team executed our first derivatives trade. June marked the first full month of trading activity, and we treated it as a proof of concept, focused on execution quality, counterparty vetting, and operational security. This crawl, walk, run approach is designed to build a sustainable strategy that responsibly harnesses Bitcoin's natural volatility while preserving our capital and protecting shareholder value. While the program is still in its early stages, I'm pleased to report that our initial results were strong and aligned with our expectations. We will measure success over quarters and cycles, not single months, while maintaining tight feedback loops to ensure continuous learning and improvement. Before I hand the call over to Gary, I want to highlight a few foundational concepts that continue to drive our performance and define who we are. Our 4 strategic pillars: energy, Bitcoin, operational excellence, and capital stewardship anchor everything we do. We focus on the KPIs that matter most: percentage of global hash rate, operational hash rate, fleet efficiency, marginal cost to mine, uptime, and Bitcoin and treasury. These are the real drivers of scale, performance, and long-term business health. We call this disciplined approach the Cleanspark way, which is executed through the everyday grit of our team. It's more than a philosophy, it's embedded how we work and how we win. This quarter, that combination of strategy, execution, and culture came together to deliver record-setting results, our strongest quarter in company history. I want to thank every member of our team for embracing this vision and driving Cleanspark to its position as the leading publicly traded Bitcoin miner in the world. With that, I'll now turn the call over to our CFO, Gary Vecchiarelli, for a closer look at the financials. Gary, over to you.
Thank you, Zach. As we've mentioned,
Let's go, Gary. I love Gary.
Third quarter was record-setting in so many ways. But as we dive into the numbers, please keep in mind that our success this quarter has been the logical result of our focus on bringing traditional bottom-line business discipline to one of the newest and most innovative industries in the world. Our revenues for the third quarter were approximately $199 million, an increase of $95 million or 91% over the same quarter last year. We produced 2,012 Bitcoin for the quarter, 436 more than the same quarter last year, or an increase of 28%. Notably, this was also a few Bitcoin shy of our all-time high production of 2,031 Bitcoin in fiscal Q2 24, which immediately preceded the halving event. This is representative of the significant growth we've achieved in a short 15-month time frame, and especially impressive given the impact of the mid-April 2024 halving. our average revenue recognized per Bitcoin produced in Q3 was approximately $99,000 each, which is an increase of approximately $33,000 or 50% over the same quarter last year. Looking at our margins, our gross profit increased by approximately $50 million year over year, with a profit margin of 55% for this quarter. When compared to the immediately preceding second quarter, our gross profit increased $12 million or 13% during the periods. This quarter's increase in gross profit was primarily due to the combination of greater Bitcoin production at higher Bitcoin prices and lower energy costs, significantly outpacing difficulty. This quarter, we recognized net income of approximately $257 million. Our adjusted EBITDA was $378 million for the quarter. On a normalized basis, when taking out non-cash items, it was $78 million, which represents the cash generated from our mining operations net all cash expenses. Notably, our marginal cost per coin was 44,806, which represents an increase of only 5% over the immediately preceding second quarter. The slight increase in our marginal cost per coin is primarily attributed to an increase in mining difficulty. However, it is important to note that we have made investments in acquiring and maintaining one of the world's most efficient mining fleets, for which we have seen an increase in efficiency and corresponding decrease in energy usage per terahash. Prioritizing fleet efficiency has always been a core strategic theme for Cleanspark, and it is one of the reasons why we have been so successful at driving shareholder value through counter-cyclical investment. Our all-in cost per kilowatt hour decreased during the quarter to 5.6 cents. As we have mentioned on prior calls, we intentionally manage to profitability rather than to a specific cost per kilowatt hour. This maximizes our Bitcoin production numbers and may result in us occasionally mining Bitcoin at higher prices per kilowatt hour. Looking at our overhead and expenses, our total cash overhead, which we consider to be professional fees, salaries and wages, and G&A expenses, less stock-based compensation, increased approximately $4.6 million or 17% over Q2. This was primarily driven by an accrual due to a true-up on our local property taxes and property and casualty insurance policy. I've spoken on prior calls about our risk-averse approach to safeguarding our assets. As a result, insuring our top-of-the-line fleet comes at a cost, and since we have significantly grown the value of our miners, mining equipment, and infrastructure by approximately $420 million since last fiscal year end, we have chosen to also right-size the insurance policy to protect our investment in miners and infrastructure, which now stands at well over $1.3 billion in fair value. We are taking steps to minimize costs related to our insurance program, which I expect to be realized in the coming quarters. The other increases were largely seasonal or related to growth. We ended the quarter with $35 million in cash and over 12,600 Bitcoin, representing a fair value of approximately $1 billion. In total, the company had more than $1 billion of liquidity at the end of Q3. I'll have more to share about our Bitcoin treasury activities in a few moments. Total debt as of the end of the quarter stands at approximately $820 million. Note that this amount is net debt issuance costs of approximately $16 million, which were incurred as part of the company's $650 million convertible transaction in December. As a reminder, this issuance has a 0% coupon and an effective conversion price of $24.66 per share. When it comes to our Bitcoin treasury, you have heard us talk about our efforts, which internally we refer to as the Digital Asset Management Team. I am pleased to report that in the third quarter, we onboarded several high-quality counterparties and completed our first derivative transaction at the end of May. We have previously discussed our conservative approach and strategy to monetizing our HODL balance, which we describe as a crawl, walk, run strategy. We're currently in the crawl phase, and while the volume of the derivative transactions is still ramping up, we are happy to see the proof of concept come to life. These results are just as good, if not better, than what we had initially projected. We completed a number of derivative transactions through our selected partners, solely comprising the writing of covered calls. While the total dollar value of these premiums aren't large enough to separately present on the income statement, I will tell you, On a risk-adjusted basis, the cash-on-cash returns look quite promising. For example, we have written and will continue to write short-term calls slightly out of the money. If these get called away, great. We use the proceeds to fund our operating expenses, and we likely sold at amounts greater than what we would have sold at spot at the time we wrote the calls. If they expire out of the money, we keep the premium and roll the strategy forward. Additionally, we are writing low delta calls, also on a short or midterm basis, which have a low likelihood of expiring in the money. These premiums are used to generate the yield we set out to achieve. We expect to use approximately 40% of our HODL balance to generate a target yield of 4% on the entire Bitcoin treasury. We also expect the volume and complexity of our strategies to increase as time goes on. I also want to point out that we feel very comfortable with the risk-reward relationship of our derivative strategies. However, we are not comfortable with lending out our Bitcoin, a practice some of our peers engage in. We find that lending out Bitcoin is typically on an unsecured basis and often only borrowed for speculative purposes.
Mara,
we have internalized the lessons learned from stories such as FTX, Three Arrows, and Celsius, and have incorporated risk management best practices as part of our institutional grade efforts. More importantly, the yield generated from derivative strategies appears to be greater than lending activities and, on a risk-adjusted basis, performs far better. We will continue to have a conservative yet opportunistic approach to our Bitcoin treasury and believe our strategy will generate appropriate returns for the risk we take. Bringing my comments regarding our treasury function to a close, I want to drive home an important point. We have a structural advantage due to two factors. One, we have a reliable Bitcoin production operations, and two, our capital strategy, which includes funding operational expenditures with production. This gives us a unique strategic advantage amongst our peers, where we can achieve a better risk-adjusted portfolio yield while transferring fewer Bitcoin to counterparties using derivative products versus lending. Looking deeper into our balance sheet, there are some other deals I would like to highlight. We have the ability to self-fund operations and grow our Bitcoin balance while enhancing shareholder value. In April, we were proud to expand our relationship with Coinbase through their Bitcoin collateralized lending program as part of our broader strategic approach to capital management and increasing our line of credit with Coinbase Prime to $200 million. Given our clean balance sheet and conservative approach to debt, we have significant additional capacity to raise cost-effective and non-dilutive capital. Our current Bitcoin holdings of over 12,700 are valued at approximately $1.5 billion at today's spot price, representing a source of liquidity and opportunity. And we believe this quarter was the right time to evolve from a nearly 100% HODL strategy. We have been long on the record that the 100% HODL strategy was not sustainable for the long term, and our current capital strategy is rooted in business fundamentals and with the intention of limiting dilution as much as possible. We view our approach as deliberately strategic rather than ideological, particularly now that we've reached our current scale and escape velocity. While we remain committed to Bitcoin as a long-term hardened asset, we believe a more effective way to increase shareholder value is through a balanced approach between monetizing new production and growing and monetizing our treasury. As a part of this strategy, we intend to further diversify our capital stack. As we have consistently emphasized, our focus is on ROI and our ability to make real-time decisions in the market. Given today's market environment, we view the revolving line of credit as the most efficient and responsible path to supporting accretive growth. And our strong balance sheet positions us to take full advantage of that opportunity and others. It's our intention to continue to use proceeds from the revolver for accretive CapEx purposes and intend to manage the business on a net debt basis to ensure proper liquidity to cover all debt obligations. I want to take a moment to discuss our investment in growth past 50 exahash. We have approximately 20,000 of the latest generation immersion units paid for and in hand, which represents 6 exahash of compute. We have over 1 gigawatt under contract and a little over 800 megawatts currently operational, which equates to over 200 megawatts contracted and not yet energized or operating. For these 200 megawatts, as of today, we have approximately $75 million of CapEx cash needs left to build out all 200 megawatts, which we expect could come over the next 6 months. Additionally, as we have discussed on prior calls, we have historically been successful in rolling our contracted options for machines with Bitmain into the latest generation machines. We have approximately $17 million on deposit with Bitmain as of today and have received an extension on the option as we negotiate what the size and terms of the next order are. Looking ahead, we remain confident in Cleanspark's ability to lead through innovation, discipline, and scale. As we chart our path forward, we are energized by the opportunities in front of us and remain committed to creating lasting value for our shareholders, our partners, and the communities we serve. With that, I'll turn the call back over to Harry to open the floor for questions. Harry?
Thank you, Gary, for that detailed financial overview. We will now open the floor to questions from the analyst community. Operator, please provide instructions and manage the queue for the Q&A session.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. And your first question comes from the line of Mike Colonnese with H.C. Wainwright. Please go ahead.
Colonnese.
Hey, good afternoon, guys.
I like this
Congrats
guy.
on a
Met
really
him,
strong
actually.
quarter here. First one for me, Zach, you mentioned that you have over 200 megawatts of additional contracted power available in the existing pipeline. Could you just unpack that a bit and speak to how you envision bringing those megawatts online over the coming quarters?
Yeah, absolutely. Mike, thanks again for joining the call. Appreciate your support. That 200 megawatts is, in areas that we operate in. Some of these contracts come as a result of, expanding on existing operations or, getting something nearby. How we're looking at that from a rollout is our first focus is going to be on that 10 exahash. We have some optionality beyond that. So we really only require a portion of the 200 megawatts to roll out this next piece of infrastructure, leaving 100 megawatts of optionality in addition to the pipeline. We are still really building on what that's going to look like after that. Again, the focus is on maintaining and outpacing difficulty while acquiring, additional market share from a percentage of global hash rate. So, I do expect the next 10 exahash to come up quickly. And we will have more news on the balance of that in the near term.
Great. Appreciate the color there, Zach. And obviously some really good organic growth opportunities over the near term here, but curious to get your views on the current M&A landscape and your appetite for potential deals here.
Yeah, we're still seeing a very robust pipeline in the private space in particular. Frankly, we think that there's opportunity elsewhere too, as miners rotate out of mining into HPC and they evaluate the assets they have on hand. Many miners are going to be faced with the decision of going all in one direction or the other. And, we are ready and willing to be the first call that comes in. So I'd say it's very robust. There's great opportunity in the M&A landscape, and we look forward to hopefully taking advantage of some of that in the future.
Great colors. I appreciate you taking my questions.
Your next question comes from the line of Nick Giles with B. Riley Securities. Please go ahead.
Thanks, operator. Good afternoon, everyone. Guys, nice job here. My first question was just on the digital asset management side. I mean, when would you expect to reach targeted run rates, or maybe in your words, Gary, when would you expect to be kind of fully running here? I just want to kind of make sure I understand the cadence of this new strategy. Thank you.
Hey, Nick, thanks for the question. So we expect it's going to ramp in the coming quarters. As you can probably respect, that there's a lot to consider when you're establishing institutional grade desks such as what we're doing, right? And we want to make sure that the trades that we're doing Not only the strategies are coming out the way we expect, but there's a lot of financial reporting, internal control, tax considerations as well. And so far, everything is going just as good, if not better than what we expected. So for us, we again are taking a very measured approach to this. And as we start to onboard additional counterparties and look at more complex strategies, I'd expect that we'll probably ramp to that really over the next year.
Got it. That's helpful. My next question was just on the growth pipeline. And, you guys have relied on building strong relationships with your utility partners. And so I was wondering if you could speak to, what are those conversations looking like today? Have you seen lead times for interconnect shift at all? Are you competing with HPC sites to any extent? Just any color there would be great.
Yeah, great question. I think it's important the context to look at it in. When we approach a utility, we approach them with a flexible load in mind. And the flexibility is an asset in their portfolio. There's a very small number of hours every year that utilities reach peak capacity and risk needing to require curtailments. And for us to be early in line to be that curtailable party puts us in a different class when it comes to data centers who want mega sites that are very large and that require firm load. Data centers, the way they're structured and the way the business really runs is it's not advantageous to raise your hand and say that you're willing to be the flexible load. You want to run flat out all the time as much as you can. And so as much as there are absolutely conversations where, between capacity and availability, there is competition in the space, we're a friendly face in that scene of players. And so we see abundant opportunity. I mentioned the pipeline, which, is multiple gigawatts. That pipeline is with utilities that we feel, comfortable that there's an opportunity to meaningfully and actively move forward rather quickly. And for, a large portion of that, our flexible nature creates that opportunity.
Guys, I really appreciate the update. Continued best of luck.
Thank you.
Your next question comes from the line of Brian Dobson with Clear Street. Please go ahead.
Hey, thanks so much for taking my question. So you spoke in pretty great detail about yield generation. Just a follow-up question there. So 4% on your HODL would do a lot to cover operating expense. Would you give us just a little bit of color on what percentage of your HODL you're thinking about putting to work, and the time frame that percentage of the HODL might be out, so we can kind of back into what types of returns you're looking at on a short-term basis?
Call.
Hey, Brian, thanks for the question. So in my comments, I specifically called out actually that we plan on using 40% of the HODL balance for yield generation. Okay. And so if you extrapolate that based on a 4% return on entire HODL balance, it's probably closer to 10%, which we believe is very reasonable and achievable, if not a number that we can exceed, at least based on the small sample size that we have in June. So in terms of the ramp, again, we're gonna grow the team, we're gonna grow the complexity and volume of those transactions, and we think we'll grow it within the next year. Grow it to the 4% target within the next year.
Yeah, excellent. So, at the beginning of your prepared remarks, you also kind of opened the door for selling power assets. Are you encouraged by recent M&A that we've seen? And I know it's early days, but how do you view demand for those assets?
Yeah, so, maybe I'll step back and also add some clarity there. So the underlying assets that we own and the ability to have land with a power contract gives us control that has value regardless of whether you're using it for Bitcoin or not. We are always open to evaluating the use cases. It wouldn't mean that we would sell it or not sell it. It means that we're always evaluating optionality. Now, we firmly and strongly believe, and the numbers continue to prove themselves, that the returns we're generating taking that infrastructure paired with power and generating returns in Bitcoin mining is outpacing and outperforming any of the available alternative uses. When and if there's a point in time that flips, we are open to that. Now, I will say that the geographic location of many of our sites adds quite an advantageous position for us in that situation, but we would still hold firm to it's really about the cash on cash returns that those assets can generate in whatever form. So we're not really looking to downsize, exit, trade, or transition. We are just looking to always maximize the use cases of our assets.
If I could add one more thing, I think the point to drive home here is that the value of our assets on our balance sheet is not reflective of fair value. The fair value of those assets and access to energy is far greater than that. And I think that's something that may not be accounted for in the current valuation.
Yeah, thanks. That's very
There you
helpful.
go.
And then
CFO
just
just
one
said
last
stock is
comment on the
undervalued.
treasury models. You called them out as a macro positive. I agree. Do you see these companies as an accelerant in bringing more Bitcoin-related ownership into portfolio management and also call it wealthy individual portfolios?
Yeah, I'll take that one first. Look, the more people buying Bitcoin, the merrier. I think that anything that leads to greater adoption of Bitcoin is good for the Bitcoin ecosystem and really the whole TradFi system. What we're seeing now is that there's a number of these treasury companies that are coming to market or looking to come to market, and there's billions of dollars locked up waiting for their SEC statements to go effective. And we think that type of buying power is only going to push Bitcoin prices higher. But ultimately, I mean, just as we saw today with that, executive order crossing president's desk, Bitcoin's going to start to infiltrate other areas of the traditional financial networks, such as 401ks, pensions, and all of that. And we've been waiting really for this moment, and we're here to really capture those tailwinds and upside.
Yeah. And, in addition to that, the upside kind of trends further. Not only are these treasury companies existing, but with how SAB 121 and the changes that were around the repeal of it are taking place, it creates massive additional opportunities. Everything from not only just banks holding it, but you now see institutions allowing leverage against Bitcoin-based assets, such as treasury companies, such as ETFs and things like that. And so all of these changes coming together creates more capital in the space, which we see as nothing but positive tailwinds.
Thank you very much.
Your next question comes from the line of Greg Lewis with BTIG. Please go ahead.
Yeah, thank you, and good afternoon, and thanks for taking my questions. Gary, realizing there's probably only so much you want to say. You kind of laid out clearly how you're thinking about the ability to be opportunistic with the HODL strategy, and then of course you overlaid it with the derivative strategy. But I guess more not as much about Q2, but in July it looked like there were a decent amount of the production was sold. And I guess you could say, well, we were selling the Bitcoin that we were produced, or really what I'm wondering is, there was a sharp run up in Bitcoin price in July. What I'm wondering is, did that maybe trigger some of those covered calls to be exercised, and is that maybe why we saw more Bitcoin sold in July than, say, what it looked like was averaging in Q2?
Yeah, thanks for the question. I'll tell you foremost that with this new capital strategy, our focus is on no dilution, right? And so we're willing to sell the entire month's production if need be. But I think we've hit a sort of a Goldilocks zone where not only do we get to sell to cover operational expenditures, cover some CapEx and/or service the line of credit, but we also added to the HODL, right? So we didn't sell everything. If you see, we've increased it by 90 to 100. I'd like to continue to stair step that, but at the end of the day, we really see this as an area of non-dilutive capital, and we would rather sell the production than issue equity or take on additional debt or whatnot. But for right now, I think that we could, hit the trifecta in terms of all three areas.
Okay, that's great to hear. And then just on the pipeline, the 1.7 gigawatts of potential out there. I guess a couple questions around that. Just given the lead times that we're hearing multi-year, some states 3, some places we're hearing 4, even longer. Realize you might not want to get too specific, but as we think about that 1.7 gigawatts, any kind of structure in terms of how we should be thinking about maybe in baskets when some of that could potentially come online, maybe in 26, 27, or 28.
No, the way I would think about that is, it's all optionality. I want to stress that first and foremost. The second, I think I want to point to our strategy versus some of the other strategies that exist, not only in the data center space or not only in the Bitcoin mining space, but also the data center space. A lot of the parties that are searching for power are looking for it in very large chunks in single locations for their purposes. We have a lot of flexibility in coming in, let's say, between 20 and 50 megawatts. Plus, some of these are even bigger than that. But a large portion, I'd even say 30 to 40% of that in our pipeline is power that if we were to choose to take it, we could take very quickly without the need for long-term infrastructure investment. Now, the balance of it absolutely needs infrastructure investment, but we're also choosing where we're investing. Rural areas, we're seeing some of these areas have lower lead times and the time it's going to take them to get things because they've already been planning for years to ramp up their distribution because there's lots of these net export states that are trying to find ways to keep it inside. So are there lead times? Yes. Most of our lead times are measured, in months. I would say, for when it's a big investment, it's going to be between 12 and 24 months. We don't really look at anything beyond that. And that's just the pockets of the areas that we're looking at. So I think we have a strategic advantage. If we wanted to go build a very large amount of megawatts just outside of Chicago, let's say, we would be having a completely different conversation with that utility around lead times.
Super helpful. Thank you very much.
Your next question comes from the line of Paul Golding with Macquarie Group. Please go ahead.
Thanks so much. I wanted to ask, given the recent deal with Canaan for more Avalon immersion miners that was announced, I wanted to ask how you're thinking about price of hash rate. You have this 10 exahash pre-purchase, and just trying to think through how you're approaching the hash rate price dynamics in the context of so many institutional miners pausing and pivoting to HPC AI, and just thinking about opportunistic deals going forward or backwards looking given this 10 exahash to come. Thank you.
Hey, appreciate the question. Thanks for joining the call. We said over a year ago, we welcome when we see miners exit the space to pursue other avenues because it creates counter-cyclical opportunities. So the benefit we're seeing as we get into the tail end of this year and we, optimally see the trend continue into 2026 is a softening of demand for those miners. And that softening creates opportunities for us as one of the largest buyers for the majority of the manufacturers to strike a deal, to push power prices in our favor because there's just not as many customers as maybe they expected there would be this time of the year or there was the year before. So we're seeing really great movement in the pricing that we think will benefit us over the next 12 months in particular due to that softening. So we're pretty enthusiastic about what we see.
I'd also add that, with the increase in competition, because you now have more miners, more manufacturers in the space, that also helps contribute to the softening. So you have an increase in supply and a reduction in demand, and we know what that does with prices.
Thanks. I guess, is there a scenario where you could foresee maybe proactively placing deposits or engaging capacity, even if that optionality isn't something where the power, you have line of sight to the power, but simply to take advantage of what might be this counter-cyclical pricing dynamic and then find the power later, or potentially maybe resell or just run ahead of what the capacity pipeline looks like? Thanks.
Yeah, that we've done that in the past. I think, any mining company, and if you look at how we've done it over the cycles, you're either long infrastructure and power, or you're long miners. And it's kind of this ebb and flow that goes through. So when it's advantageous, just like we did last year, we executed a very large option order that put us in a position to lock in pricing when we thought it was the right time to lock in pricing. So we would, potentially look to do that again when we find timing where we think pricing is at the right place. We would look to lock in long-term optionality to acquire, large amounts of miners and, work on the infrastructure on the back end, depending on if we were long or short at that point in time. So absolutely, when the timing is right, that's always been part of our strategy.
Thanks, Zach.
Thank you.
Your next question comes from the line of Bill Papanastasiou with Keefe, Bruyette & Woods. Please go ahead.
Yeah, good evening. Thanks for taking my questions. Maybe for the first one, perhaps you can give us an update on how you're weighing the existing tariff environment today when it comes to future fleet expansion. Hoping you could walk us through some of your options to prevent or mitigate these impacts and how might that change your strategy going forward. I think we heard from a peer of yours today that, secondary market purchases of hardware are being more heavily considered this day. So just curious to hear your thoughts as well.
Yeah, the secondary market purchases are always an option because ultimately you're looking at net pricing by the time you get it in your hands. The tariff environments are, unfortunately clear as mud, as it seems, on a day-to-day basis. We've seen them improve, we've seen them ebb and flow, but it is absolutely part of our calculus. Our goal and intention is always to acquire miners at a best-in-class pricing at the lowest cost possible. The other good thing we're seeing is almost every manufacturer has now announced that they either do or will have North American production capabilities. So, for better or worse, if you're a manufacturer, it is pushing things onshore. We do expect that to ultimately benefit us as large-scale buyers, because as they make these large investments in factories and production here, they need anchor clients to be purchasers of U.S.-made equipment, and we are ready to buy U.S.-made. That is the easiest way to navigate tariffs in this environment, is just to go direct where it can be done.
Appreciate that color, Zach. And then maybe just speaking to the Bitcoin treasury strategy, it appears that Cleanspark was selling at peak, I think this last quarter, 85% of monthly production, while still funding, obviously, all of the OpEx. Maybe you can give us like a little bit of a scenario analysis on how that could change depending on upward or downward price movements to Bitcoin, and whether the thought that we might be in the tail end of a crypto cycle may adjust any of your strategy.
Yeah, Bill. So look, in the case where Bitcoin price increases, we just sell less Bitcoin, right? Because our costs aren't directly attributable to Bitcoin price going up and down, right? They're relatively fixed. Power prices don't change necessarily because Bitcoin price goes up 10% overnight. So I think that we definitely welcome additional, increased Bitcoin prices because it means that we could sell less. And then we have a choice to either pad the HODL balance or wrap it on credit, which is a priority of ours. In the event that Bitcoin price decreases, we'd obviously have to sell more than we would in the other scenario. But, at the end of the day, we feel very comfortable, obviously, selling up to the production. And that's where digital asset management comes in, because if we can monetize this volatility up and down, we could use those premiums to offset the OpEx and ultimately have some amount of Bitcoin that we're able to add to the HODL balance. And I believe that over time, as we get a little bit longer in the tooth in the cycle, which I don't necessarily believe that we're late in the cycle by any means right now, but when we do get maybe a little frothy later on down the road, the digital asset management efforts will not only generate premiums and cash on cash returns, but we'll be able to use a portion of that premium to add some downside protection on the entire HODL balance.
Thanks. Very clear. Appreciate that color as well.
Your next question comes from the line of Brent Knoblauch with Cantor Fitzgerald. Please go ahead.
Hi, guys. Thanks for taking my question. Kind of on a similar topic here with selling some of the Bitcoin production. At what point, I guess, is it a function of scale that allows you to, sell Bitcoin to cover cash costs? And with greater scale, would you be able to sell less Bitcoin to cover the same cash costs? And how are you thinking about that dynamic? Because I think if, investors we speak to get more comfortable with the ability for you guys to, sell Bitcoin and accrue Bitcoin to the balance sheet at the same time, it kind of becomes a whole different story.
Yeah, great question. I'll tell you that's one of our distinct competitive advantages is the operating leverage we have, right? So every new exahash that we bring online, the majority of that is dropping to the bottom line, which means that we have to sell less Bitcoin to cover that monthly nut. I think that's the best way I could put it.
Yeah, no, that helps. And then on maybe the pace of growth, I know you guys talked about wanting to outperform or outgrow network hash, which, as I'm sure you guys know, is quite volatile from day to day and month to month. So, how are you, I guess, what is your expectations for network hash growth maybe over the rest of the year or maybe over the next year? Maybe that will help us frame how we should be modeling your mining hash growth.
It's always a guess with network hash rate. The good thing is I think we're seeing a general slowing. As the public miners were a very large driver of hash rate growth historically over the last 3 to 5 years. As capital, miners like us continue to deploy capital in this space, but there's a subset of our peers that are deploying either less or not at all. And so I think that's a contributing factor to hash rate growth slowing. What we're also seeing is, the upgrade cycle as miners get more efficient, as they get replaced, the same amount of power produces the same significantly larger amounts of hash rate. We think that's actually going to be a larger driver over the next year of, global hash rate growth than potentially new build-outs of, Bitcoin mining data centers. Interestingly, we saw at the end of last quarter where, if you looked at the entire quarter, it kind of canceled itself out. It grew 8%, it went down 8%, it was flat, right? We're expecting a little bit more of that, a flattening of what it's going to be, but it's still going to stair step up. We're going to be making, improvements to our facilities. We're going to continue to grow, but we feel, long story short, without making any direct predictions, we feel very comfortable on our ability to outpace the global hash rate growth. And, we also see, something we didn't get into, but one benefit of M&A in this space is instead of building and adding to the global hash rate in total, when you acquire a piece of existing global hash rate, it's a direct add without, diluting yourself. So all of these things are options, but again, I think it's positive that we're seeing investment occur in other forms of compute because it is slowing down global hash rate growth.
Awesome. Thank you, guys. Really appreciate it.
Your next question comes from the line of John Todaro with Needham & Company. Please go ahead.
Hey, guys. Thanks for taking my question. Here, the first, can you just help me understand the risks in the yield-generating strategy? Just kind of where could the model break down, just given it is a large portion of the stack, right? It's 40%. So just help me frame that up a little bit better.
Right. So like with any other option, like let's just take covered calls, right? You have several variables you look at, right? You have duration, you have strike price, right? Those will translate to some, volatility and or delta. And I'll tell you that we take greater risks on the short end, such as writing a 1 or 2 or 5 day call that might have a higher delta. And you can look at delta as probably the percentage that it's going to get called away. The higher the delta, the higher the premium. And so and we call that internally our Spot Plus program, right? So technically, instead of just selling at spot, we should be selling at a strike price the same as spot for tomorrow, for example, and that will effectively mean that we'll always be able to stay ahead of the spot market because of the premiums. So the risk is in the short term, I don't think it's very, very high because we know what our cash needs are on a week-by-week basis, and that we write calls, high delta calls, not in excess of that. On the longer term, low delta calls, 10, 15 deltas, we're not really writing calls too far out, but maybe 4 to 6 weeks currently. Those deltas will generate a small amount of premium, and we'll just increase the kind of volume and close those calls out if we need to, if they're at if there's an opportunity to close them out in terms of they're profitable. I will tell you, going back to my comments about versus lending. In lending, you're lending out, let's say, 100 Bitcoin out to someone, right, on an unsecured basis. What's great about the derivative strategy is that we have negotiated these ISDA agreements where we only have to post a percentage of the collateral, right? So the collateral is only a percentage of what the total contracts are. So if we write 100 contracts for Bitcoin or 100 Bitcoin contracts, we only need to post 30 to 45% collateral and then have margin calls as you get closer to the strike date. And so that means that it reduces our counterparty risk. And our counterparty risk is further reduced by the fact that we do robust due diligence on our counterparties to make sure that they have the financial wherewithal to really responsibly maintain that collateral. And oftentimes it means that they have licensing or registration with government regulators.
Got it. Okay. That's very helpful. I appreciate that. And then just one quick on M&A, I think from where we're all sitting on the sell side, seems like these opportunities would be coming up here in the next couple of quarters. But just kind of any sense on timeline of these opportunities? Like, are you already looking at some pretty closely, and are the assets looking fairly attractive out there now versus some of these opportunities that presented themselves a couple of years ago?
Yeah, I can't really comment on timelines, of course, by any means. I can just say that there's a robust pipeline of opportunities. And, just like all things, some are looking better than others. We say no to nine deals out of 10. That's what we've always done from a historical basis because, capital is always finite. And, our goal to have the best capital stewardship to generate the best ROI means that we only want to take the best deals that are out there. So again, as much as there's a very robust pipeline, it's about finding the best ones, and that's going to happen in right time, right place concept.
If I could add one other thing based on, Zach's exactly right. ROI is the top of our list on any acquisition we look at. But I will say that we're not interested in paying the premium that's required to take out another public company because that's premium that we can put into other infrastructure, machines, upgrading our fleet, and get a better ROI. So I think you're going to see less public to public. And if there's acquisitions, it's probably going to be in the private space or greenfield.
Got it. That's very helpful. Thank you, guys.
Your next question comes from the line of Stephen Glagola with JonesTrading. Please go ahead.
Hey, Zach, Gary, and Harry, thanks for the question.
Steven's awesome.
Zach,
this analyst is awesome.
Dig into more on your
Good
prepared
friends.
and Q&A remarks around the potential flexibility of certain sites for alternative uses. I think it's clear that Cleanspark has consistently shown its prowess in mining as an operator and strong long-term commitment to Bitcoin mining. At the same time, your hybrid peers are seeing higher valuation multiples by pivoting toward AI HPC. So there's specific sites you view as particularly well suited for non-mining applications, such as AI HPC. And additionally, have you engaged any preliminary discussions with potential partners in these areas so far? I'm just trying to gauge what would have to change in your calculus or the company's calculus for any strategic shifts here. Appreciate it. Thank you.
Yeah, it would have to be, quite simply, we have 55% returns that are consistent based on the types of investments we have to make, which the capital outlay is very predictable, significantly less than a lot of these alternative compute spaces. What I will say from a geographic point of view, the closer we are to a major area, whether that's Atlanta, Georgia, or Cheyenne, Wyoming, or places like that, it's always more valuable. And so again, I don't think that's any secret that data centers want to be in areas with low latency opportunities. So I'd call it 100 miles from a major metro area creates significant value for our power assets. But, it's not just alternative forms of compute. Anything that where power is the ultimate source of the value is how we're looking at this. Areas with lower cost power than others obviously creates, its own calculus in the portfolio. So, you asked a little bit more specific. I obviously can't comment on more specific about any ongoing discussions, whether they're happening or not. But, that's how we look at it. Geography plays a very important role, but it has to be able to produce even better returns than we're already producing. We also have our view on where Bitcoin is going. And so if you look at the direction and our directional view of Bitcoin and the returns we think it's not only generating now, but can generate in the near term, that's something else that also has to be contended with before we would consider a change.
And would you?
I'm going to add one more thing. I don't think it can ever be underestimated the fact that if we were to take down any one of our sites, major metro or not, for 2 or 3 years to do a full rebuild, how much revenue we're going to miss out on. That is also something I just want to call out is very important to us, is what is that revenue cost going to be to us? It's an opportunity cost that goes away. And so there's always an uphill battle for any other opportunity.
And Zach, I appreciate all that. It was really helpful. And just like to clarify too on, it sounds like, you might be maybe, looking into this to some extent. If something were to materialize or you were to go more in this direction with maybe something closer, Georgia sites or so forth, would that be telegraphed, on an earnings call or something beforehand, or would this just be something like might get announced one day, and you did a deal for some alternative purpose? I'm just curious if you can add any color there.
Yeah, I'm going to say what I've always said. We're not in the business of saying we're going to do something that we're still trying to figure out. We're in the business of doing what we say we're going to do. And so we would announce it when and if there is a real deal and opportunity, because we don't need our shareholders to wonder if there is or isn't a customer that exists.
Great point. Thank you.
Your next question comes from the line of John Hickman with Ladenburg. Please go ahead.
Hi. As you might imagine, most of my questions have been answered. I was just wondering what you're seeing as far as transaction costs, not transaction costs, but transaction fees for each, award. What's happening there?
Yeah, John, I'll take that. So those have been relatively low. So, I think they've been between 1% to 3% of the block size. I'd point you to a website that we use. It's mempool.space/mining. It's a great, reliable place. You can see even what the last block was and what the reward was. Knowing that every block right now is 3.125 Bitcoin. If you see something that's greater than that, the delta obviously is going to be transaction fees. But transaction fees, there's going to be an ebb and a flow. It's really hard to predict those. I think that when you look at the theory of hyper-Bitcoinization and really the life cycle of Bitcoin, the miners in coming decades, right? I think it's going to be a while until we get there, but in coming years, the miners are going to flip from actually being paid by the subsidy to the transaction fee. And I think we got a ways to go there, but with Bitcoin adoption increasing in greater volumes, we'll see that tick up. But it is hard to really forecast that, because when you look at the halving, there were some transaction fees that were in excess of, what was it, like 4 or 5x or 10x, whatever the subsidy was. But the great thing about mining is that if and when that uptick in transaction fees does come, there is no incremental cost to us. So that's just additional gravy.
Okay. Then one last question. As you kind of upgrade your fleet to the latest miners, is there a market for the older stuff still? Like, do you have to just write that off, or can you sell it? What's the strategy there?
No, there's a very robust market. In fact, that's always existed. And actually, these tariffs, as was mentioned earlier, potentially make it more robust. So we are seeing some of the older generation miners continuing to have a more long-term, I'll call it terminal value as they're sold to third parties, because there's a lot of groups that, don't want to deal with either whether it's shipping timing or the tariffs or the unknowns around that. You can get certainty by buying it essentially from your neighbor. And so it's a very, very robust. And so we absolutely expect to extract value and have, each and every quarter over the past couple of years, as we rotate out of miners, we definitely pull dollars out of the market.
Which I'll add really helps us with the ROI calculation for future investments too. So that's why keeping our finger on the pulse of the secondary market is very important, because that's part of our calculus.
Okay, thanks.
Your next question comes from the line of Jim McIlree with Chardon Capital.
This is kind of a long
Go
earnings
ahead.
call, man.
Yes.
It's good. There's a lot of interest. It's good.
Gary, you talked about 40% of your HODL balance used for asset management. And I'm wondering if that is limited by the 40%, if that's limited by your risk tolerance or the market depth or liquidity or your internal expertise. If you can just comment on that, please.
Yeah, great question. I think through all of our comments, regardless of whether it's digital asset management or how we run the business, there's a certain prudence and conservatism that we take in all regards. So the 40% is just what we would allocate, the greatest amount of the HODL balance that we would put at some risk. And remember, I'd answered this in a prior question, only a percentage of that gets posted as collateral. So the amount that's actually at risk is less than that. But again, with low delta options and derivatives, we're able to get some additional juice and continue that low risk. We're always able to take out derivatives with cash if we need to close out those positions because we don't want them to get called because maybe it has a low tax basis, things like that. But at the end of the day, that's really meant more for risk management. And that's going to increase and decrease as we see opportunities and as our experience in this area kind of treks on.
Great. That's very helpful. Thank you. And Zach, you've talked a lot about energy this afternoon, but the current administration has made significant changes in the nation's energy strategy. I'm wondering if you have any comments on how that might impact your short-term or long-term expansion activities.
Yeah, I think it's more the way that the policies are changing. I think it's going to be more of a medium and long-term thought process, because what the administration is really focusing on is largely with generation. There's a little bit, yes, on a natural gas basis. There's a production mindset, which should hopefully drive down natural gas prices. But really, it's about building production, because with additional generation being produced, obviously there's more power to be had by the markets in general. We're not going to see the impact of that for the most part for 3 to 10 years. And different fuel sources, whether it's nuclear, that's probably the furthest out. And then, of course, you see things such as natural gas that I think will be, sooner on the list. So again, on a medium to long-term basis, what it does is it makes us more confident in where the U.S. is going to be from a strategic positioning for keeping cost in control for power. Just further solidifying that the U.S. is a great place to grow. Now, do I think that the administration is going to solve all the problems, inside the next short term? No, but we're incredibly well positioned and really strategically positioned as miners with our flexible load, where we can handle any of the short-term volatility and pricing that comes. But again, by the time you get to the back end of that short-term, I'll call it pressure at this point in time, we think that the policies are setting the U.S. up to be, very solid on the energy basis long-term.
Great. Thank you. Appreciate it.
There are no further questions at this time. Harry, I turn the call back over to you.
Thank you again for joining today's earnings call. We look forward to staying in touch and sharing future results with you in the coming quarters. Stay tuned for more groundbreaking achievements from Cleanspark, America's Bitcoin miner.
This concludes today's conference call. You may.
All right. Well, that That was kind of a long conference. I mean, that went for an hour and 15 minutes. That's long. It's good. There's a lot of interest. I don't know any other Bitcoin mining company that got peppered by, let's call them unscripted questions, because not every other, but a lot of the other Bitcoin mining companies out there have scripted Q&As, Mara. So I appreciate that, actually. I think that's a good sign that there's a lot of interest. There's some analysts on the call that aren't necessarily on the calls of other Bitcoin mining companies, and I think that's really a good thing. At the end of the call, I just wrote down, 4 words on my notepad here, and it's more of the same. Those are the 4 words, more of the same. That's my overall summary of this earnings report, of this earnings call. They're very confident in their strategy right now. They're confident in the optionality they have with low CapEx requirements. They're confident in their trajectory as a company. They're confident. The CFO literally went out and said on this earnings call that, the stock is undervalued. The fair value of their assets. I mean, we discovered it. The total assets on the company's balance sheet is $3 billion, and the market cap of Cleanspark is right at $3 billion. So there's no premium getting assigned to the assets of the company, and that's the infrastructure, that's the Bitcoin, that's whatever. And the CFO said that. The stock is probably undervalued because of that. So more of the same isn't necessarily a bad thing. Now, what I will say is I think Cleanspark's kind of backed themselves into a corner a little bit where their business is 110% predictable. We know how many Bitcoin they mine every quarter. We know their fleet efficiency. We know the general price of Bitcoin that they're mining every day, at which they're mining every day. So we have a general feel, and we generally know what their energy costs and their inputs are going to be. So we have a general feel going into these earnings reports of, okay, like I said, Cleanspark's going to come in with $199 million of revenue. What did they do? They came in with $199 million of revenue. You can calculate their EPS. It's all very, very predictable stuff. And so they've backed themselves into a corner here where they're focused on business operations, which I am 110% a fan of. I mean, I think that's phenomenal. And they're the only company in the space that's really focused on business fundamentals. Here's what we do. We're going to do it profitably. We're going to expand those profits over time. But that's a problem, because when a company and when a stock is somewhat predictable in what they report, it means that there's very few catalysts out there remaining that might cause somebody to buy or sell Cleanspark stock outside of the price of Bitcoin moving. That's obviously a reason somebody would buy or sell Cleanspark stocks. If Bitcoin goes higher, well, they'll buy. If Bitcoin goes lower, they'll probably sell. But there's a problem in that as well, because if that's the only reason somebody buys or sells your stock, well, then you're competing with all of the capital in the world that is looking to buy a Bitcoin-related equity when Bitcoin rises and looking to sell a Bitcoin-related equity when Bitcoin falls. You're competing with the Bitcoin treasury companies. You're competing with the Bitcoin mining companies that also have AI attached to them. There's no surprise in what Cleanspark reports. And the amount of announcements, the growth, the acquisitions, all that stuff, those press releases have decreased in quantity tremendously over the last couple of quarters. That stuff just doesn't get announced as much because the company has reached such large scale. But that means that, again, there's very few catalysts out there outside of Bitcoin's price movements that will cause somebody to buy or sell your stock. Now, I think moving forward, what might make a difference here is when they do achieve operating leverage, operating profitability, including that depreciation and excluding the gain or loss on the fair value of Bitcoin. That might be something they can point to and say, well, look, this is a reason you should pay a premium for our company. And that's something that could come in as a surprise at some point in the future. And as they expand their hash rate, that profitability should only grow over time, which again is a very, very good thing. I'm just saying they've kind of backed themselves into the corner. I like the transparency. I love the transparency. I like that they don't, hint at doing something that they're not going to do just so that they can sell shares via their ATM to raise funds. A lot of other companies do that. They'll try and hype up their stock so they can sell shares, so they can either go buy more Bitcoin or buy a bunch of AI infrastructure that has yet to return any profits. But investors love that right now. You just have to realize that is the market we're in. It's not necessarily a flaw at the company. It's just the market the market dynamics we're dealing with right now. Investors just really could care less about operations right now. They're all for increasing Bitcoin per share by companies acquiring Bitcoin at spot prices via dilution and debt financing. They want all of that they can get. They're perfectly fine. They're not a shareholder of MicroStrategy. They're a customer of MicroStrategy, and they love it. Okay, so I don't know. I don't know. It's just the market dynamic we're in. And there's all the HPC AI investment stuff going on out there. You can count on one hand how many companies are actually making money on HPC AI right now. The rest of them are they're throwing cash into the fire. They're just burning it. But investors love it because they don't care about it. They just care about the hype. That's just the market we're in right now. Things will normalize eventually. But your guess is as good as mine as to when that will be. So I don't know. That's kind of my updated thoughts right there. I took some notes throughout the call. Again, nothing out of the ordinary. I thought the comments about how they had to right-size their insurance policy because they've grown so large was interesting, and how they think that cost will come down over the future quarters. Obviously, the digital asset management team stuff is really, really exciting. I'm glad they gave us some color there. I would expect some actual hard numbers in the next quarterly report. We didn't really get the hard numbers. They gave us kind of what they're projecting or guiding to with the digital asset management team. But next quarter, I would expect some hard numbers where we can actually see, okay, is this really benefiting the business or are we wasting our time? I think next quarter we're going to find that out. My hunch is that it's actually making the company money and will improve the company's margins, decrease the amount of Bitcoin they have to sell at the end of the month to cover their OPEX, all of those things. They said they only have $75 million of CapEx requirements left to energize the 200 megawatts that are currently under contract that obviously aren't energized right now and hashing. Yeah, I don't. Other than that, there's not a whole lot else that I wrote down. They're going to start guiding towards, their total ownership of the Bitcoin network hash rate and reporting their results as a percent of the total global hash rate. And I think that's a good change from the time-based guidance. We did hear that the CEO, Zachary Bradford, said they're going to bring 10 exahash per second of hash rate online in pretty quick order. And they're going to do that over a cost-effective timeline, obviously, which would increase their ownership of the global network by around 1%. And he said that there would be news coming soon in regards to that 10 exahash per second expansion. So how did you guys think the call went? I should ask you guys that. I thought it was a fine call. It was just more of the same. We didn't get any huge announcements. Really, the tidbits weren't huge. The nuggets we did get were from the digital asset management team regarding the digital asset management team, and I thought that was awesome. I think they're really on the right track there. Obviously, hearing that they're not going to pause or really slow their growth purposefully. If it's cost effective and it's profitable to grow, they're going to continue to grow. I think that's a really good thing. D9 says he's not disappointed. Michael Anthony said he missed a lot, but did Cleanspark make a profit? They did make a profit thanks to their gain on the fair value of their HODL balance. Let's see. Loranda says just got fully out of the stock uninspiring earnings call. All right, that's fine. That's your choice. D9 says, Iron already have AI profits and insane potential for it. I could go on a tangent about that. They really don't have AI profits. You can go back and look at the overall CapEx investment they've put into their current GPU fleet of H100 and H200s. They guided for a 24-month payback period, and we're well past the 24-month payback period, and they're nowhere close to being paid off, the GPUs. So that's the problem. Yeah, they can tout the 95, 98% hardware margins all they want, but it doesn't matter because all those profits are going back to paying off the CapEx rather than going back to shareholders. So it's kind of a farce. It's really not profitability. Will they reach that at some point? Potentially. I don't know, though. I mean, there's no evidence that they will. They just announced a huge new investment into Blackwell chips. Are those going to be paid off in 2 years? Probably not. And then, then all of a sudden your payback, the true payback period starts to bleed into their useful life of the GPUs. They're depreciating these assets over a useful life, and if it matches the useful life, literally zero profits will go to shareholders. But again, people, they just don't care about that right now. They just want to buy AI. They want to buy Bitcoin treasury companies. All that stuff. The process says, I don't know, I'm pretty disappointed the pair trade will continue. Maybe, but there's nothing wrong. I mean, I have so much patience. I don't know what the hurry is, really. You know, the pair trade can continue for a long time for all I care. Bill's Mafia said, good call, but nothing more. I need something else. So I wanted to get excited again. That's fair. That's a fair takeaway right there. M&A is the only thing that can save them. I don't agree with that. Fundamentally, the business is as healthy as ever. So I don't agree with that at all. Just because, you know, there's a difference between the price a market is willing to pay for something at any given point in time and the true value behind what the market is paying for it. And that's the alpha you get in the stock market. If things were always priced correctly, if things were always priced the way they should be priced, there would be zero money to be made in the markets. So the fact that there's a mismatch right now, that's what opportunity is. That's the definition of opportunity in the stock market. So it's not a reason to be upset or frustrated. It's a reason to be excited. Anthony says, there's nothing exciting or flashy about this company. No wow factor, which is why the stock is flat and volume has been down so much. I'd give the call a B-. That's a fair takeaway. It's a fair takeaway because I don't think they're trying to be exciting or flashy right now. I don't think they believe that's the sustainable business model. They're really chasing after a sustainable business model where profits are delivered to shareholders at the end of the day and profits grow over time. And the business gets healthier and healthier and healthier. The process says, I like the company long-term, but the opportunity cost of holding versus investing in other assets, that's the issue. That's fair, but that's why you own other assets. You don't have to full port, Cleanspark. I think that's a mistake to full port any company. Even the management team members of Cleanspark don't full port their company. They own other Bitcoin mining companies. They own other stocks in the market. They own these other equities. Fairfax says, but Cleanspark is a treasury company, and you're exactly right. But the markets don't care that they're a treasury company because they're not going out and diluting shareholders to increase Bitcoin per share. And they're not going out and taking on more debt to increase Bitcoin per share. They're not utilizing that strategy. So because they're not utilizing that strategy of dilution and leveraging up the balance sheet, we're not going to pay a premium for the company. How bass-ackwards is that? You tell me. That's just the state of the market we're in right now. DFly says, what don't I like about Cleanspark? I've always said this. I don't like the preferred share structure. Some of the management team members own preferred shares that vote like 45-1. I don't like that structure very much. I know it's to protect against hostile takeovers and things like that. I just think there's a better way to do it. It basically means that the common shareholders vote is meaningless because they can pass or reject any proposal they like because their preferred shares vote 45-1. If any of the Cleanspark management team members are listening to me right now, I'm not right about that. Please correct me, give me a call, send me a text. But that's my understanding of it as of today. And that's the one aspect of Cleanspark that I really don't love because it means that common shareholders' votes are meaningless. And I don't like that. Something about that seems a little un-American for America's Bitcoin mining company. Let's see. D9 says, I hope it goes below 10 tomorrow, then I buy a bit more. Jim says, Rex, honest question, where's the shareholder value they keep talking about? My shares are definitely not adding value. Well, there's a bunch of different angles you could take at that, Jim. It's a good question. It really is. But again, it goes back to the stock market is a short-term voting machine. A stock can go up or down at any given point in time, regardless of whatever profits or how healthy a company's business is. And that's where the mismatch is created. You can look at things like stockholders' equity. Has stockholders' equity grown? If so, there's some shareholder value that's been generated there. And obviously that's impacted by dilution and, if companies use dilution to buy Bitcoin, things like that, or if they're plowing cash into HPC AI versus mining rigs, all of that goes into that. So that's a very interesting way to look at it, is stockholders' equity. But again, if things were always priced the way they should be priced, there would be no value to be had in the markets. You'd never make any money. So while people get frustrated right now, I kind of sit back and relax. Actually, I feel comforted in the fact that the markets don't understand what Cleanspark is and what they stand for. Really quick before I forget, somebody posted on Twitter that he thought I was folding laundry during the call. No, I have 1, 2, 3, 4, 5. I have 6 shirts. They're Cleanspark shirts to give away. They're all double XLs. I brought them home from Vegas. If anybody wears a double XL, send me a message over Twitter, and I'll get one of these shirts shipped to you. I'm actually wearing the one right now. I don't know if you can see it. There's the front. And then, I don't know. It just says Cleanspark kind of above the shoulder blades behind your neck. That's the white one. And then the black shirt, it says, hang on, says Bar Satoshi. So I got 6 shirts to give away. They're all double XL. So let me know if you wear double XL. Send me a message over Twitter and I'll get that shipped to you. And fun fact, actually, if you go to your web browser and you go to barsatoshi.com, it will redirect you to Cleanspark's homepage. So kind of a neat Easter egg there. Let's see how Cleanspark stock is doing after hours. It seems like, yeah, so we're flat after hours. The short-term bump from the EPS beat has kind of sold off. Okay, let's go back to the questions here. DFly says, share buyback program. Why not at these levels if this is undervalued? They could do that, but you have to remember to buy back stock, you have to forgo something else. And usually that's growth at the company. So they'd have to choose to start selling their HODL balance, which I don't think would be very well received. They'd have to maybe take on more debt just to buy back stock, which I'm not a big fan of, and you shouldn't be either. Or I guess those are basically the only 2 avenues. They have to come up with the cash somewhere. Right now, their operations aren't necessarily profitable when you include depreciation and obviously all those expense line items at the company. Katie says Bitcoin would have to average 4,000 a week to get to 200,000 at the end of the year. I don't see it. Yeah, I don't know. I have no idea where Bitcoin is going to be at the end of the year, and I'm okay with that. I just know over time, I think it's going to appreciate in value. You know, people, I was saying this, and people told me I was crazy, and now people are jumping on board with me. I don't believe in the 4-year cycle. Obviously, there's the 4-year Bitcoin halving cycle, but when it comes to the price of Bitcoin, are you kidding me? You think there's a 4-year price cycle that you can perfectly predict? Oh, it's going to top around this time, and it'll bottom around this time. I mean, how naive are you? You know, markets eventually, you know, if you know that something's going to top it during this duration of time and bottom during this duration of time, chances are everybody else does too. And they're going to front run the top, they're going to front run the bottom, and that would render that arbitrage opportunity useless. So the 4-year price cycle of Bitcoin, complete bullcrap. I think the cycle of Bitcoin is going to look more and more like the cycle of the stock market over the last 200 years, where it's basically, even despite all the recessions and the dips, it's done this. Well, I guess it's backwards. It's done this. It's gone up in a straight line to the right. That's all it's done. That's what Bitcoin, I think, is going to do. Despite all of the maybe short-term downturns we get, maybe the bear markets we get, Bitcoin is bigger than any entity, any person, any individual, anything like that. Bitcoin's going to be fine. It's going to appreciate over time, in my opinion. Let's see. Agar says, boring, these guys need to hire. I don't know what you mean by they need to hire. Any other sector, these earnings would send the stock to the moon, but in the crypto sector, Cleanspark is dull. Investors don't have appetite for this. Very true, but you have to remember appetites change. Right now, the appetite is hype. Don't care about profits. I'm just going to buy into what's hot and what's hypey, and that'll be it. That's my game plan. That's the philosophy of the markets right now, and it's, you know, that's painful for a company like Cleanspark. Absolutely, because that's pulling capital away. But we know that appetites are going to change. Hype never lasts forever if profits aren't delivered, and it doesn't look like profits are going to be delivered. You said they should hire a promoter? No, they should not hire a promoter. You're starting to fade into the short-term gamble, short-term hype type of trader when you say something like that. No disrespect to you, but No public company should hire a promoter of their, but that's exactly what companies are doing. So who am I? All these people getting hired off of social media to be advisors for Bitcoin acquisition companies and Bitcoin treasury companies. Give me a flipping break. Those companies, they don't need advice on how to sell shares via an ATM to go out and buy Bitcoin. They don't need advice on how to take on debt and go buy Bitcoin in the spot. They don't need that advice. They're hiring these social media influencers literally to hype up their stock, get eyeballs on their stock, so they can utilize that strategy of selling shares effectively to increase their Bitcoin or crypto per share. But that's not going to last forever. That is a corner of that's a corner of the market right now that I really think is bubbling. It is not sustainable. It is not sustainable at all. Now, I'm completely fine if somebody, if a company wants to hire somebody off of social media, but they hire them to do something actually useful for the business. Promoting, no, sorry. I don't know. I went on a rant. The process says, riddle me this, though. What happens when the overall market corrects itself? Well, then everything corrects itself. You're not getting any protection if you're an HPC AI company if the market has a correction, because it means we're probably in a recession. And all of the HPC AI, I shouldn't say all, but the vast majority of HPC AI tenants, they don't make money. Most of them don't even have revenues. They pay their data center provider as more venture capital comes in. They pay them with investment dollars. And if we have a recession or we go through a bear market, venture capital is going to dry up. And your safe haven in HPC AI, all of a sudden it's not going to be a safe haven anymore. Okay, so we actually did have a couple of takers on those t-shirts. Send me a message on Twitter and I'll get that taken care of. Yeah, I know. I'm sorry. They're all double X's. Nordic, send me a message on Twitter and I'll get you a small. I'll get it worked out. I'll get you a small. Just send me a message on Twitter so I don't forget. The process says, let me get a white shirt. I'd be happy to ship you one. Let me know. Try Eat says, Rex, what other business opportunity can CleanSpark offer with Bitcoin besides Pure Play? Can they expand using their data center as products? I think I understand your question. I'm just going to resort to what the management team said. I mean, they just have optionality for everything. Like if it does become more lucrative for the company to explore HPC AI or maybe sell a data center to somebody that wants to explore HPC AI using their infrastructure, then yeah, they can take advantage of that. I think when you say what other business opportunities are there, I think there's going to be more business opportunities when it comes to Bitcoin in particular, like working with ETFs, working with exchanges, working with vendors. I think there's going to be a big future there, but we're probably years away from that. Agreed. Bear markets won't be half as brutal as in the past. People waiting to buy Bitcoin at a 7 or at a 60% drawdown. Dream on. Yeah, I agree with that. I also agree that I think that the Bitcoin mining companies, the days of their 90% drawdowns and share price are probably over because we're just further along in the learning curve when it comes to this sector. We've had our bad actors. We've had our bankruptcies. And when we have bad actors and bankruptcies in our past, it's less likely that those things are going to repeat themselves again in the future. Just because we learn, and we learn what caused those bad actors. We learn how to identify those bad actors. We've learned how to avoid the bankruptcies. We've learned how to avoid the bad debt deals and things like that. So I do agree with that point. The process. Does it not concern you that the appetite being risk on and into Bitcoin-related stocks, and we are seeing no upside? When the appetite changes, we won't go up. Like when that bubble pops, though, we will go down with it, right? Or do you disagree? I think you're probably right. I think I agree with you, but it's when the capital shifts hands and the capital is waiting to be deployed elsewhere that CleanSpark needs to be there to welcome in that capital with open arms and say, okay, you were a MicroStrategy customer. They diluted you so that they could increase their Bitcoin per share. And for whatever reason, you value Bitcoin per share. That's not for us to judge, but you value it. And you know what? We're CleanSpark, and we're a company that can deliver you Bitcoin per share, but in a different way and a much healthier way. We won't dilute you further. We won't dilute future shareholders. We won't over-leverage the balance sheet. We are going to add Bitcoin to our balance sheet through operations and at a profit. And we're going to decrease our share count over time via share buybacks. And as a result of those two things, your Bitcoin per share is going to increase. If that's what you value, why would you not buy Cleanspark? That'd be my pitch. That would be my pitch. So yeah, at first, is it likely that Cleanspark would fall if that bubble pops? Yeah, probably. But they need to be ready when the reset happens. Chris says, Chris, I will definitely get you one, Chris. Absolutely. BLM, why is Cleanspark not running? I wish I had the answer, because if I did, I'd have it fixed, or I'd try and fix it myself, but I don't have the answer. I mean, I've talked about it endlessly. I think there's just a lot of alternatives out there, pulling capital away from the Bitcoin miners right now. And Cleanspark's identity isn't sexy, and the markets want sexy right now, regardless of profits or not. So we'll see if it pans out over the long term. You guys know my position there. I think it will. What is the argument to selling Cleanspark and putting that money into Bitcoin now? Well, you would do that if you think, if you think Cleanspark will just match or underperform Bitcoin's price, then you would just go buy Bitcoin. But if you think Cleanspark is going to outperform Bitcoin, which it theoretically should, like if Cleanspark demonstrates operating leverage, okay, we can acquire Bitcoin all-in costs for $92,000. And the asset that we're acquiring is worth $130,000. We have operating leverage. We can acquire an asset for a discount and see immediate profits go to shareholders from that. Yeah, that's reason to pay a premium for a company. If you think that's a likely future for the company, then you would buy Cleanspark. And that's what I believe. Try Eat says, who do you think are the bad actors for the next 50 to 60% drawdown? Could it be treasury companies? Bingo. I'm going to get myself into trouble if I go further into that. I'm never scared to say anything. But I do not think, I'm going to regret saying this. I do not think Michael Saylor is the best poster child for Bitcoin. I'll just say that much. The process says, how do I send you a message if I'm not verified? I think my DMs are open to everybody. Like, I don't think you have to be verified to send me a message, unless that's a new Twitter rule. I don't really know. Okay, guys, I think I'm going to end the live stream here. Thank you all for showing up. I love chatting with all you guys. It remained pretty civil. I had to time out like 2 or 3 people, but that was pretty easy, honestly. Again, if you're new here, I appreciate all of you coming in, listening and watching the earnings call with me. If you're new here, returning, not yet subscribed by chance, please hit that subscribe button and hit the like button. I'll leave this live stream up for replay if you want to re-listen to the earnings call. I always leave these up for replay. Nordic says Sailor Maxis are coming for you again, Rex. I'm sure. Let it be. But I'm telling you, we just got done talking about how it's the treasury companies that are hiring these social media influencers to work as advisors for them. Tell me how that's not a bubble. So we'll see. I don't get it. I'm being too hard on them probably, but I don't know. Not for me. I could be proven wrong, but you know what? I believe in Bitcoin over the long term, regardless of what happens short term. And I've hedged my bets. I own Bitcoin. I own Cleanspark, and that's where I want to be right now. If people make money in the Bitcoin treasury companies, heck yeah, man. Heck yeah. I'm not going to fault anybody. I'm not going to be jealous. I'm glad when anybody has success. Michael Anthony said, any other earnings did you like today? I honestly haven't gotten a chance to look at many of them. The other company that I own, that I've looked at today, One Stop Systems, had really good earnings. But I'm kind of trying to keep that stock on the down low because it's a pretty low float, pretty low market cap. It is risky. But, every time I talk about One Stop Systems, the stock is up like 15% the next day. I mean, it's just ridiculous. And I don't intend to move stock prices. I don't trade around my videos. It's highly illegal. Disclaimer in case the SEC is listening. I don't do that. I don't pump and dump. I never would. Against my morals, big time. All right, thanks, everybody. Looks like I'm all caught up on the chat. Hope you have a great rest of your day. I'll have a Cleanspark video posted tomorrow or this weekend, so stay tuned for that.